markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. We're being brought to you by Interactive Brokers. Interactive Brokers clients earn up to 4.83% on their uninvested, instantly available U.S. dollar cash balances. Rates subject to change. Visit ipkr.com/interest rates to learn more. Traders waiting for the next big data point for the markets, and that's going to come tomorrow with the Consumer Price Index. Ahead of major stock averages, they are a little changed right now. VF Corp, the leading stock in terms of index points, up close to 10%. This is the maker of Vans, the shoes, and Timberlands. They could be on board with an activist investor to shake things up at the company. Most active right now, Tesla. That's down about 0.7%. Overall, S&P 500 unchanged at 50.25. The Dow Jones Industrial Average 17 points higher right now. The NASDAQ 100 15 points lower at 17,947. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube. That is the internet, John. You go to youtube.com, search Bloomberg Radio.
Don't tell me who won because I T-voted.
You
Watched it.
He put on his VCR Betamax tape.
I can kind of, but he probably did that,
He
though,
did
right?
that.
Like, we're joking, but he did that.
Yeah. So
No, actually, I do have a TiVo.
That's what I'm saying. This
Yeah.
is real. We're not just,
No.
poking fun. This is fact.
This is how he rolls. All right, we're live here. But, all right, so Super Bowl yesterday, great game. Big platform for advertisers, arguably the biggest day of the year for the advertisers. The question is, did these things even work? I mean, is it worth it? Is it worth $7 million plus whatever your production
I
is?
was not impressed.
I don't know. I thought some good ones, some ads were good. I like the Dunkin' Donuts, but there's some people who actually measure this as a business. They don't just watch it; they measure it as a business. Our next guest, Kevin Krim, he's the CEO of Entertainment Data Oracle. Kids call it EDO. He joins us live here in our Bloomberg Interactive Broker studio. He knows his way here. He's been in Bloomberg before. Kevin, thanks so much for joining us here. We really appreciate coming in. I thought there was some pretty cool ads. From your perspective, what are brands trying to do here at the Super Bowl, and how do they measure if it even worked or was successful? How do you think about it?
When marketers are thinking about what they're trying to achieve in any marketing, but especially on television, which is at the top of the pyramid of value in advertising, at the very pinnacle of that peak is the NFL, and the Super Bowl is at the absolute top. When we've measured 9 Super Bowls now, and what we're measuring is the consumer engagement with the brands or products being advertised. And any marketer's trying to achieve awareness and then engagement with their brands. And we're measuring engagement as searches and branded website visits, app usage, the kind of digital behaviors that are predictive of sales lift, but they're immediate and they're easy to collect large amounts of high quality data.
What's the time frame for that? Is it like right after the ad airs? Is it in the next 24 hours?
Most of that engagement happens within minutes of the ad airing, but because of streaming, because of the ability to DVR or TiVo it, you do have a tail to that, and we'll see activity for a week or more after a big ad airing like the Super Bowl. And when we see what kind of engagement is driven relative to what else you can get on TV, like let's say an average 30-second spot on primetime broadcast or cable, the Super Bowl does many multiples of that. We're talking the average advertiser would have to buy hundreds of those 30-second spots on regular primetime to get the same impact as a single airing on the Super Bowl. Wow. So on a dollars basis, we find that the Super Bowl is a very good rational decision for most marketers, but then the pressure's on the creative, and the creative has to be strong or you're not getting your money's worth. And that's where, we saw ads yesterday. Some of them were fantastic. Others, I think, played it too safe. And you're going to see quite a range in how much engagement is driven from those ads.
So from your perspective, maybe from the data's perspective, a winner or two? Which one did you
So
jump out at you?
let's talk about real quick the top 5. Number 1 was Deadpool 3. Number 2 was
I have thoughts on that because I'm a huge
She's a
Deadpool
fan.
person.
There you go.
Love it. But then again, he could come on, Ryan Reynolds could come on and say hello, and I'd be like, that was brilliant. That was amazing.
It was a fun spot, and the tease of having Wolverine
Awesome.
joining him is very satisfying for any Marvel fan. Number 2 is the film adaptation of Wicked. Another interesting teaser, Ariana Grande in one of the starring roles there. So that's going to pick up a lot of attention. And then number 3 was the Volkswagen ad that kind of harkened back to their heritage of bringing the Beetle to America. And then it teased their new all-electric bus. So the VW bus returning to America after a long gap. Number 4 was Temu, as we all learned was how to pronounce it yesterday. They ran 6 spots between pregame, in-game, and post-game. 6 spots. That's a huge investment.
Yep.
But this is an interesting one. A lot of people's opinion of that kind of spot would say that it was one of the worst. And
actually, that doesn't even resonate with me. What is the
Temu
company
is
do?
it's a mobile shopping app.
Okay.
And they started their first real kind of advertising in the U.S. was last year's Super Bowl.
Okay.
That kicked it off. They were one of the most downloaded apps in the Google App Store and the Apple App Store all of last year. They followed it up with a bigger bet this year, and it is
because the discounts are insanity. Like if you go on there.
Yeah.
I mean, you have to measure, like, what am I actually buying? Like, there's that conversation we have, but the number price, it's unreal. And there's, like, extra deals. Like, it's huge.
Temu and Shine, I'm not sure how to pronounce it properly, are both China-based apps that are about these giant discounts and are very popular, apparently, with bargain discount shoppers.
How about booze?
We saw, really interesting, we saw no liquor ads this year. We saw a smaller number of beer ads than last year. What we did see was some top performers were soda ads, and we had Poppy in our top 5. Poppy's this new...
Oh, yes, we're Poppy fans.
Premium priced. Would you call it like kind of like more popularized kombucha? Is maybe the way to...
Without the fermentation. Like,
Right.
I'll give Poppy to my daughter, but she can't have kombucha.
Right, because there's trace amounts of alcohol
Exactly.
in the kombucha. Yeah, so it's
Exactly
got
how I was thinking about
probiotics,
it.
low sugar, supposed to be good for you, and it's
Okay.
$2 a can.
Yeah. Oh.
So the margins are incredible. It's an independent soda company from Austin, Texas, husband and wife founders, and they made a big statement in
Austin, Texas.
popping into the top 5. That's going to lead to a big lift in their sales. I mean, we can say that with total confidence. Whether that sticks or not is Alex is saying it's good. So they may have a shot at being a top soda brand.
Not bad.
Okay. How about nostalgia? In the nostalgia-driven TV reunions?
A lot of reunions. I would say they were a mixed bag in terms of performance. I loved most of those spots. I mean, the Duncan spot was in our top 20. That was probably the best performing of the nostalgia-based ads. We saw Jennifer Aniston and David Schwimmer reunite in the Uber Eats
weird.
ad.
Did you like that one?
I thought that was a fun moment.
Yeah.
It was a fun moment.
Okay.
But again, and to the other top performing spot, we had the Parks and Rec, several of the leads in Parks and Rec in the ad for Mountain Dew's Baja Blast soda, and that was a lot of fun.
Interesting. And we had to, I like what you put in your notes here that streaming is the new syndication.
Yeah.
That's where shows go to live.
That's right.
Forever. And one of the examples, and then maybe become popular again, one of which is Suits. Which is all over my social media feed, and I never even paid attention to it when it was on whatever network it was years ago.
Right.
But they're making a huge comeback.
Right. So that was NBC Universal originally. Yep. I think it was USA Network when in its first run. The top streaming series on Netflix for last year, and you saw the Suits stars and a bunch of other stars from a bunch of the series that were hot maybe 15, 20 some years ago and are now top streaming series in their sort of rerun stage on whether it's Peacock or Netflix or others.
What else stood out to you? What was like a wow factor?
Yeah, I mean, I would say besides those things that we talked about, I would say the automotive category was really interesting. All the ads outperformed the average. They were all import or foreign automakers. They were not any of the big 3 from Detroit, which is very unusual.
So why do you think that was? Was that did you hear anything coming out of Detroit saying, hey, we're just...
I didn't talk directly to all of them. Some of them are my clients. So I'll be discreet. But I would say what I heard loud and clear from the industry overall, you've got to have the right product to launch. You don't want to have a disrupted supply chain when you're doing a big Super Bowl ad. It usually is best to use a Super Bowl as the start of a big campaign. So to launch a new model is key. And then, yes, if you're coming off of bruising, negotiations with your unions, probably one of the better things to do is maybe just sit it out,
That's a good point.
wait till
Also,
next year.
Well, what's their messaging? It's like, hey guys, these EVs, we're still making them. You should buy one, but we're also going to do these ICEs, and these are really cool. Go buy those. Like it's like they're we're going to do all that money over there. I mean, it's a pretty tricky line.
It's a tough balancing act. So to sit on the sidelines for this year, smart move.
Were you surprised that we didn't see any price inflation this year from last year? $7 million for a 30-second spot. Usually we've seen mid-single, high single-digit inflation year to year.
I think it's a challenging market as we shift from traditional to streaming. But I would say anyone who bought an ad from CBS this year got a fantastic deal, right? I mean, the Super Bowl always performs consistently, but on top of that, you had the Taylor Swift effect. And you can't plan on her team being in the Super Bowl. That's a bit much. But just if you were sitting there last September as the season got started and you made a commitment to $7 million, you had a good hunch that this would be a sustainable positive effect, a tailwind, if you will, for the whole sport with Taylor involved.
All right, good stuff. Kevin Krim, thank you so much for joining us. Kevin Krim, he's the CEO of Entertainment Data Oracle, EDO, joining us live here in our Bloomberg Interactive Broker Studio, looking at the S&P 500 up just 2 points here. Nothing happening. Let's go to our news in New York City with Michael Barr.
Thank you very much, Paul, Alex, and John. Republican presidential candidate Nikki Haley said it was a mistake for former President Donald Trump to say he would abandon NATO members to a Russian incursion if the allies failed to meet defense spending commitments. The former UN ambassador spoke to Bloomberg this morning.
NATO's been a 75-year success story. We have not had war in the region. And if you look, Russia has never invaded a NATO country. They've invaded Georgia, they've invaded Ukraine, they've invaded Moldova. So we want to make sure that, yes, do we want NATO to pay more? Of course we do. But the last thing we're going to do is side with a thug.
President Joe Biden called Trump's comments appalling and dangerous. A quick-moving storm is set to bring New York City some snow, while areas farther to the north and east, including Boston, may get much more. Tonight into tomorrow, rain changes into snow. Manhattan and other parts of the tri-state area will get about 2 to 4 inches by the time it ends early Tuesday afternoon. New York schools are already announcing they are going to remote learning tomorrow. Around 6 to 10 inches are possible north and northwest of the city. The Kansas City Chiefs beat the San Francisco 49ers 25-22 in overtime in Las Vegas. With the Chiefs behind in the first half, head coach Andy Reid was asked about his animated sideline conversation with tight end Travis Kelce.
Yeah, he caught me off balance. I wasn't watching. Cheap shot, but that's all right. He did good. He was really coming over, just put me in, I'll score, so that's really what it was. Well, I love that. I mean, it's not the first time, so I appreciate him.
But not everyone was tuning in for the game. Fans were anticipating Usher's halftime performance. Alicia Keys was also a guest during the show. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. With this Bloomberg Business Flash, the major averages all in the green right now, not by much. And for those of you keeping score, this news, NVIDIA has now overtaken Amazon.com in terms of market value in stocks. So we are starting the week on a relatively cautious note. 7 of 11 major industry groups in the S&P 500 higher. You have energy in the lead, healthcare the biggest drag. Investors also waiting for the first of this week's inflation reports consumer price index. We're to get that tomorrow. Stuart Kaiser at Citigroup points to strong data as a reason to remain bullish of equities.
We think the strong underlying data, is a good environment for owning equities from a macro perspective. What's different now is that for a period of time, you had like the quote-unquote hard economic data that goes into GDP was really strong, but more of the survey forward-looking stuff was a little on the weaker side. And that had people questioning, is that survey data forward-looking, and do we need to be concerned about that? That's now also turned higher.
And right now, the S&P 500 up about 2 points, 5,028 on the index. The Dow Jones Industrial Average, 17 points higher, 38,689. And the NASDAQ 100, 15 points higher. That's up just about 0.1%. Haven't done treasuries, so let me do the yields right now. The more policy reactive 2-year. This is why I haven't been doing it. Unchanged, 448. The 10-year, the long bond, the benchmark, 4.18%. Again, also that is unchanged in terms of yield. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
So here what's interesting.
Alex.
I just took it. I don't have to wait for you to toss to me because I'm so excited to say. So S&P 500, like you were saying, right, 5028. But I take a look at the strategist's call for this year. The average is 48.67. The median, 49.50. The high, 5,200. The low, 4,200. So it's like either a lot of people are wrong, we're going to see a lot of upgrades, or we're just going to have a crash out at some point, which is quite interesting. So
and at the end of the day, it's all about making money. So you do the earnings analysis on the S&P 500, and the earnings surprises so far this quarter of those companies that have reported is something like 80% at this point. So it's impressive.
Yeah, you can make the argument that it's legit and that it's actually broadening out to a certain extent. Let's ask Kim Forrest. She is founder and CIO of Boca Capital Partners. Hey, Kim, I take a look at the strategist notes then for this year, where we're trading at right now. Is this a crash up, a melt up? Does it continue? Or is it fundamental here at this point?
Well, I have to say, I think people by and large are kind of terrible at forecasting, as we saw last year. And maybe this is more of the same, right? And I think it's going to be a crash up, I have to say, because the markers of slowdown or more than slowdown are just not there, right? So, and we'll see tomorrow, and this is a data-rich week where we have more earnings, but probably most importantly, CPI, and then retail sales to see if the consumer continues to spend. But we believe they do. So why not end the year above 5,000? I think that's a good call at this point.
Why not own the Magnificent Seven? Why not keep buying them today? Is this AI thing real? You've got a perspective here, don't you?
I think the AI thing is real. I have to disclose this. I was a software engineer working in AI before I moved on over to the world of finance as a sell-side equity analyst.
I didn't know that.
And
no
so I know of which I speak.
So Kim,
it is for real, but it's never going to play out the way investors think at the beginning of a rush, right? They think NVIDIA and Google and Amazon and all the rest of the Magnificent Seven are probably going to be winners. I think they are going to win, but there's going to be other more nuanced AI applications that come in, and it might be the killer app.
I mean, I'm looking at NVIDIA here, up 48% year to date, 250% trailing 12-month basis. NVIDIA overtakes Amazon in market value. Bloomberg News just crossed the tape here. Do I just keep buying these chips? Are chips the way to play this?
I think chips are, but I don't know that NVIDIA is our final winner. If you notice, there's a theme in chip land, and that is to make chips that are as good as NVIDIA, but maybe not cost as much. Even Sam Altman, although he's kind of a dreamer, that's the ChatGPT guy. He's really going all in on trying to design his own chips and getting people, interested in funding this new company. But I think that chips are a way to go, and it's going to allow for a more, as I say, nuanced approach. You know that we're going to have to collect data, and chips are the way they do that to put into these models. So I think chips, by and large, are a winner here as a sector.
So Kim, for individual names then, how do you play it if it's not going to be NVIDIA?
Sure. Well, I think NVIDIA wins, but does it continue to double, quadruple? I don't know.
Sure.
I'm thinking no. So the next two closest competitors that may have a product that can help people build these large AI models at a lower price are both AMD and Intel. Now, they've been known for PC chips, and that's been dragging them down. But let's give them credit for coming up the curve and serving this market. I think that they have a good shot to do that.
Kim, we're about a little more than 60% of the way through the S&P 500 reporting earnings. Any themes for you, either plus or minus, coming out so far?
Sure. I think the smaller companies are looking more interesting to me because of mergers and acquisition potential. Mergers and acquisition completely dried up in 22 leaving 22 into 23, and it's largely because we were in a rate hike cycle by the Fed. And now that we seem to have reached peak interest rate, maybe that is what is bringing people back into M&A. And I think looking for high quality companies in niche markets is another way to go.
So this wouldn't be like a buy the Russell here at this point, would it?
No, not at all. There's a whole lot in the Russell. Look for those companies that have product management, that are creating and delighting their customers, and that might go well with a larger company that needs that niche product.
But buying takeout targets, that's tough, isn't it? That's a tough one.
It is, but it's exciting. It's
okay,
what we do here.
It's hard. Fair enough. Okay.
So, Kim, are there any other sectors out there in the market you're looking for, or are there factors that are kind of driving your process these days?
Well, we take a kind of weird approach where we say we are stock pickers and mirror the S&P 500 with our picks with respect to sector weightings. So putting that aside, that we're kind of sector neutral, I think it's really interesting. Tech is big, and I think you should stay concentrated in that. But I'd also look for some unloved areas, kind of like consumer discretionary. At the top of this segment, you pointed out most of the strategists think we're going to, go backwards from here. But if the consumer keeps spending, why not look at names where the consumer is spending and that they are gaining market share?
Like where, Kim?
Well, retailers are a big fascination of mine, and we're going to, at the end of this earnings season, hear a lot more from them. I don't really want to trot out any of the names because I have smaller names in that section.
Okay.
But yeah, I do like retailers, and I think they're very much unloved at this point, given, we're all looking for that pullback or softness to occur this year.
All right, Kim, thanks so much for joining us. Really appreciate it. Kim Forrest, founder and CIO of Boca Capital Partners, located in Pittsburgh, Pennsylvania. So good stuff there. The retailers, that's a tough place to play.
It really is, yeah.
There's the headwind of, do we have too many retailers? There's a headwind of e-commerce and
real estate exposure.
Real estate exposure. I feel confident.
Inventory management.
Yep. You think, and then you have to have a call on consumer. Now the consumer's been great. So we'll see. We'll get retail sales this week.
Yep.
So we got CPI tomorrow, then retail sales on Thursday, and that tomorrow will be the great inflation indicator, and then we'll get a sense of how the consumer's doing later on in the week with retail sales.
And I look forward to like the Target and the TJX and the Walmart as a nice barometer of consumer spending. Like if TJX does well, that has a ramification for how the broader consumer is doing.
Absolutely, and we have a lot of good Bloomberg Intelligence retail analysts that we can tap into to get a sense of how the retailers are doing. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company news that we're following today. Bit of a merger Monday. Diamondback Energy and Endeavor Energy Resources in final discussions toward a deal that would create an oil and gas giant worth more than $50 billion. It would be the latest in a string of major mergers that reshape the corporate landscape in the shale oil industry. You know, the post-pandemic growth in gyms in the U.S. came to an abrupt halt in January. That's usually the busiest month of the year for gyms as people making their resolutions head off to the gym. Well, that may signal tough times ahead for chains like Equinox and Planet Fitness. Gilead Sciences agreeing to purchase Symbabay Therapeutics. This is a developer of an experimental liver disease drug. The price tag, $4.3 billion in equity value. Symbabay's drug is intended to treat a rare bile duct disorder that mostly affects women. More than 383,000 Frigidaire side-by-side refrigerators with slim ice buckets. They've been recalled following reports of plastic in the ice bucket. And the recalled appliances have an ice bucket assembly component, could break off, cause plastic pieces to fall into the ice bucket. And the Federal Reserve slapping Citigroup with a series of demands to change the way it measures the risk of its trading partners. This, according to a report in Reuters, the latest blow to Chief Executive Officer Jane Fraser's turnaround effort. A regulator sent the bank 3 notices directing it to address the matter. Separately, Citigroup's auditors have found that the bank's plan to improve internal oversight is lacking. Jane Fraser's been trying to restore investor faith in the company after years of underperforming its main competitors. Let's look at some company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good, happy afternoon Monday, almost afternoon Monday. I'm Alex Steele with Paul Sweeney. You're listening to the Bloomberg Intelligence Podcast, where we get you all the analysis from our amazing analysts all around the world. They cover 2,000 companies, 130 industries. You can also check us out on YouTube as well. Let's head over now to Michael Barr for world and national news.
Alex, Paul, John, thank you very much. Former President Donald Trump's comments over the weekend that he once told a European leader he'd abandon NATO members to a Russian invasion if they hadn't met defense spending commitments have renewed talk about what a second term would mean for allies. The European Union's top diplomat, Joseph Borrell, spoke ahead of a meeting of EU development ministers in Brussels.
Let's be serious. Let's be serious. NATO cannot be an alliance a la carte. It exists or it not exist.
Republican presidential candidate Nikki Haley said it was a mistake for Donald Trump to say that. Haley also talked about revamping retirement entitlements to fight debt.
We should not ever take away from those who have invested in and those who have been promised. America should always keep their promises. I said we should go and change the rules for those in their 20s. That's the problem. Those in their 20s, like my kids, for them, we should change the retirement age to life expectancy. Instead of cost of living increases, we should do increases based on inflation.
Former UN Ambassador Nikki Haley spoke to Bloomberg this morning. The Northeast is about to get a reminder, still winter. A quick-moving storm is set to bring New York City some snow, while areas farther to the north and east, including Boston, may get much more. Tonight into tomorrow, rain changes into snow. Manhattan and other parts of the tri-state area will get about 2 to 4 inches by the time it ends early Tuesday afternoon. New York City schools already announced they're going to remote learning. Around 6 to 10 inches are possible north and northwest of the city. The Kansas City Chiefs beat the San Francisco 49ers 25-22 to win Super Bowl 58. Ask this Chiefs fan, it's nice to win.
Oh, man, I feel ecstatic. You know, to put the money into the ticket, knowing that they was going to win a dynasty, and they did it. Oh, man, it's the best feeling in the world.
Patrick Mahomes was named the Super Bowl MVP. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, John.
So let's get back to that remote learning thing.
Yes.
So here's the deal. In some ways, it's like great. You're going to cancel school already and do remote learning, so you can prepare. You got a nice 24 hours to do that. But on the flip side, like you have to rework your entire day to manage that, and we don't even know if the storm is really going to be that bad.
I know. So I guess the first thing I saw was, is there no more snow days anymore for kids?
I guess we know that it's definitely not a thing.
It's not a thing anymore, right?
It's not a thing. Which I guess, to your point earlier in the commercial break, that's a
like
good
Americana,
thing.
though.
Right, but it's good that you're not like adding days on at the end of the year, right? But it also just, can you really, my daughter's 9. Like, what is she going to get out of school tomorrow?
Right.
A whole lot of nothing.
Well, you could say for 2 years, right? Or whatever it was, a year.
100%. Yeah, but she was kindergarten, so that's okay. But then you get older, it's like these things are going to get old real fast.
Yeah, I don't know. So I guess we'll see. Now the question is, do we stay in here? For those of us that have to be in early, do we stay in the city tonight?
I don't know. I
might
never knew with these. When I was on the morning show, I did, because it was just so stressful to like think about coming in, or I would give myself like an extra hour.
Right.
Just even if the worst case scenario, then I can at least get on a train.
Yeah. All right, we'll have to see about that with the play. All right, so we are looking to get a storm, but we haven't had no snow here for 2 years. So I mean, it's just like, so we'll have to see how it plays out.
And if you played your cards right, and you called out sick today because of the Super Bowl, and then you get to stay at home and work from home tomorrow because of the snow, you kind of banked. You banked those 2 days.
When we were kids, Paul and I, snow days, you'd take the flexible flyer out.
Yep.
Or you go ice skating at the local pond.
I had
when
snow days.
When was the last time that ever happened?
I don't know.
I had snow days.
Yeah, so my kids had snow days, but I'm thinking now in the post-pandemic world where everybody's gone to remote everything, you can do it. It's done. And so there's no such thing as a snow day. And they used to built in 2 or 3 days into the school calendar.
Oh, really? I didn't know
for
that.
snow days, and so that you can make your summer plans without having to go to school an extra week or something like that if you had a bunch of snow days. So, but I guess they don't need to do that anymore.
I'm also totally convinced that the storm's going to blow over and it'll be just light rain. But I'm not also a meteorologist, but I just don't take this stuff seriously anymore.
Exactly. We haven't had much going on, but we'll stay on top of it. Why not? S&P 500 up 0.1%. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, a big M&A trade in the energy space. So I'm just going to step on the sidelines, let Alex Steele talk to Vince Piazza, Bloomberg Intelligence senior equity analyst who covers the energy space, and let those two smart people talk energy stuff there. Eric Balchunas, Bloomberg Intelligence, he covers ETFs. There's an ETF conference this week.
Yeah.
Is it in Cleveland?
No.
Is it in Peoria?
No.
No, it's in Miami Beach
Yes,
at
it
the
is.
Fontainebleau Hotel in Miami Beach. Eric is there. So is one Katie Greifeld.
This feels like a really hard assignment.
I know. I'm going to throw her under the bus as well. So anyway, we'll check in with Eric, see what's happening in the world of ETFs. So all that's coming up. But let's kick this thing off with Mr. John Tucker, Bloomberg Business Flash.
All right, thanks, guys. Major averages higher right now, but little changed. A bit of a shuffle in the Magnificent Seven. NVIDIA shares have overtaken Amazon in market value. Let's see, NVIDIA now worth $1.83 billion. Those shares today up just about 2.7%. And economist and investor Dennis Gartman waiting for a stock sell-off, he says, to start buying equities.
Don't short the market. It is irrational. It can go higher no matter what. It's just extraordinary. But don't buy it. Wait till a correction. You're going to get a 5, 6, 7, 8% correction. It'll happen.
And the big data this week, that starts tomorrow with the reading on the Consumer Price Index. That looks like it may have eased, at least according to economists surveyed by Bloomberg. S&P 500 right now 7 points higher. That's up 0.1%. 50.33, another record if this stays on course. Dow Jones Industrial Average 55 points higher. That's up 0.1%. The Nasdaq 100 up 28 points. That's up about 0.2%. And so far this earnings season, 335 companies have reported their results, 79% delivering positive earnings surprises. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. You're listening to Bloomberg Intelligence on Bloomberg Radio, streaming live on YouTube as well. Alex Steele and Paul Sweeney here in our Bloomberg Interactive Broker studio. The Russell 2000 gets my attention, up 1.5%. Well, everything else is kind of just meandering along here. Let's check in with Nora Melinda. She's got some stock-specific stories. She covers all the markets for Bloomberg News. Nora, what are you looking at?
Let's dig back into the Diamondback Energy deal. This is the second biggest gainer in the S&P 500 right now, up as much as 10% for the biggest one-day jump since 2021. This, as we know, will create the largest operator focused on the Permian Basin. And this is after Diamondback agreed to buy fellow Texas oil and gas producer Endeavor Energy. I know we'll be hearing from Vincent here very shortly, but this was really funded by 117.3 million shares and $8 billion in cash. A really huge deal here, and as it closes, Diamondback shareholders will own 60.5% of the company.
Yeah, it looks like the markets really like it.
Yeah, I mean, typically a buyer stock don't tend to go up, but this is up 10% today.
Yeah.
How about
and you
that?
could say like, okay, maybe they overpaid on the margin or whatever, but I mean, they're getting a lot of inventory, and they're going to get to lock up a lot of synergies too, like 550 million for
and
next
they don't
year.
have to do a lot of moving costs, do they?
They really, I mean, hey, there's the headquarters across the street. You guys just pack up your boxes and move it over across the
Exactly.
other side. So there's that. You're also looking at Mohawk Industries, which
Oh, I know that one.
you
Yes.
do. Okay,
That's a carpet maker.
it makes
Exactly.
flooring, right?
John
For
Ball
home
is the
and
analyst
commercial.
on that.
Yes.
Yes.
So Mohawk Industries, they're focused on flooring for residential and commercial properties. You can pretty much get anything from them, from carpet, ceramic, wood, vinyl, whatever you'd like. Those shares are up as much as 6.1% for their highest intraday
Sounds
level
like a commercial.
since July. I know, right? At this point, I should be the spokesperson.
We should get them on. That'd be fun.
I know.
That stock is on pace for a 5-day winning streak, and this is all after Deutsche Bank upgraded the stock to buy from hold. The firm's justification for the upgrade: it expects EPS will bottom in the first half of this year. And this kind of reminded me of that story that came out earlier from BI. It was a note that said that a record $32.5 trillion in home equity could lead to a renovation spending jump. And so as we're thinking about, maybe these interest rates pulling back, maybe we'll see some renovations and people switching out their carpets.
First Boston Corporation took that company public in 1992. I used to follow Mohawk because I was at a firm called Wheat First Securities. We were based in Richmond, Virginia, so we covered a lot of industries in the Southeast. And John Ball was an analyst who covered Mohawk and all those kind of flooring companies and furniture companies that are down in that part of the world. It was an axe in those kind of names, and man, he got paid because who's covering a carpet industry out of New York City? I mean, this company's based in Georgia, and John would go down to Georgia and watch them make carpets and stuff and furniture, and he knew it all.
I love this.
And he got paid on that stuff.
I love this.
Because he said, don't pay the guy at Goldman Sachs. He has no idea what he's talking about. I'm down here in Virginia. I'm going to the furniture makers.
But I also love these kind of companies because I
Yes.
feel like they're like the end user demand. They have a really good read. You're not going to invest in carpet if you're not going to invest in your people or your building or your home. Like, it's a really late. I love those kind of reads. On what the
and it's not
consumers and
Atlanta,
what businesses
Georgia.
are doing.
It's Calhoun, Georgia, and they have 41,000 employees. It's a great American company down
This
there.
is a fair point. Okay, and also there's the other deal, Gilead, right?
Yes, looking at another deal here, CymaBay Therapeutics. Those shares are soaring as much as 25%. This is its highest intraday level on record and biggest gain since June. This is after Gilead agreed to purchase CymaBay for the idea of having it as $4.3 billion in equity value. That's how much it's buying CymaBay for. And we know CymaBay is a developer of an experimental liver disease drug. Gilead is really seeking new areas for growth to supplement its core antiviral drug franchise, and CymaBay just seems to fall right here for it.
Great stuff. All right, Nor, thanks a lot. Nor Melinda joining us. I'm breaking down some of the top stocks that are moving this morning. Can we get back to the oil thing because it's me and it's cool? Okay, so I'm looking at that oil deal, Diamondback buying Endeavor. You have FANG stock, which is Diamondback stock. It is up by 10%.
Nice.
Wow, that is a really nice move. Vince Piazza is Bloomberg Intelligence Senior Energy Research Analyst, and he joins us now. Vince, do you like the deal?
I think the deal ticks all the boxes that we're going to need to see in this M&A wave in the Permian. It grows Diamondback's acreage. It grows locations, so inventory is not going to be an issue. In terms of the price that they paid, look, Diamondback in my universe of coverage, it was the highest, had the highest premium. So they're using their multiple to get this deal done. And so elevated currency, along with some cash and debt, they do have a fairly low leverage on their balance sheet. So I think this ticks all of the boxes. They'll throw off significant free cash flow in 2024 and 2025. So in terms of paying off whatever bank loans that they're going to take on for this, I think it works out extremely well. And you're seeing the response by the investors in the marketplace. It also works out for the founding family of Endeavor. They get to monetize decades of hard work. So,
hey, Vince, I have a question though with that. I mentioned that this was a merger of equals, and I got kind of laughed at. Like, there's no merger of equals when it comes to M&A. But in this case, like, is there though?
Well, in this case, think about what Endeavor brings to the table. It almost doubles Diamondback's Midland acreage, and it brings sizable oil production for the broader Diamondback franchise. So I would tell you that in terms of size, it is a merger of equals, but the family will get roughly 30% of Diamondback, with selling off almost half the resource to Diamondback. So it basically doubles Diamondback's total size, and the founding family gets about 30% of the new Diamondback, let's say.
Vince, are there any regulatory issues here? A lot of M&A going on in this space here.
Yeah, it's going to get looked at. So Southwestern and Chesapeake getting together out in Appalachia, that's a gas deal. But that'll get a very, very clear look, a very, very deep look by the regulators. This will as well. I don't see why it wouldn't. Because of the actual size of this entity. It's going to be an enterprise value of north of 60 billion. It will be the largest Permian pure play. So it'll get looked at. All these deals will get looked at, and it'll take a deeper look, same as Southwestern and Chesapeake.
I was talking to Jen Reed this morning. She covers antitrust for Bloomberg Intelligence, and she's like, yes, like all of these are going to have to get looked at. They're particularly interested in the Exxon Permian Pioneer deal, and that all these deals are definitely going to have the FTC sort of wide-eyed looking at it. But you have to wonder, though, if they want more oil, they're going to have to do it, right, Vince? I mean, I'm just trying to think of like what the rationale would be to block, say, this deal, but like let Exxon and Pioneer go through. Like you can't.
This deal is much more North America centric, much more North America focused. So when you think about, Exxon and Pioneer, Pioneer fits within Exxon's Permian portfolio, but Exxon is a large, integrated, multinational franchise. This is more U.S. centric and Permian centric as well. But look, they're all going to get looked at. It is what it is. This is a very large transaction. Like I said, Southwestern and Chesapeake is getting looked at. This will get looked at as well. It's an important resource. What you have here, though, is you have resources now in stronger hands. You have ExxonMobil, Chevron, you have Diamondback, you have very large entities with big balance sheets and the capability to take down even greater levels of capital in order to move production from the delineation phase into the production phase.
So give me a sense, Vince, I'm putting my banker hat on. Can I keep doing a bunch of deals here? I mean, how many players are left?
Yeah, it's a very interesting question. So we put out last year the top 20 privately held PE-sponsored names in the Permian. In this case, Endeavor being the second largest. Mewbourne, which has mentioned that it wishes to sell. That's the largest of the top 20. That'll go out, we think, because it has been mentioned as a takeover candidate. Similar situation, founding family looking to move the assets. If you think about the top 5, 3 are now gone. So there is a great deal of interest. There's interest by the private players as well, especially the PE-sponsored players. You're getting close to these vintages that are aged, and now this capital needs to be recycled. So you will see more of that. You will see public buying private. Public does have the currency. In the case of Diamondback, they had a premium multiple, elevated currency that they were able to use to monetize the founding family's investment. And you'll see that as well, especially in the Permian, where you do have this difference of large cap premium valuations looking for assets and the smaller cap names trading at a relative discount to peers, but trading at a discount to the larger names as well.
Well, that's really the thing, private equity being like, oh, thank God. We can kind of get these things out. So Vince, what I also found interesting, I was reading through some of your research on this just to get more background on some of the private players, is just how much these private guys have been responsible for a bulk of the drilling. And in some ways it makes sense, right? Shareholders want the big guys to be capital disciplined. They're public. They got to report. So therefore they have to be capital disciplined. But a private guy doesn't have to do that. They can do whatever they want. Walk me through the importance, though, of these guys within the shale development.
Yeah, so we tend to think that the private players have been responsible for at least half of the production growth in the last few years. Wow. What we have seen is these privately sponsored players putting out that production growth to entice the public players to buy that asset. And what the public players tend to do once they integrate that asset is to slow that production growth down, remove the rigs from that private player, and generate cash flow. This enhances free cash flow and allows the public player to pay down that debt, to push out payouts, dividends, or stock buybacks to the investors for rewarding them sticking around post the deal. So that's what we've seen. Production growth by the private guys, public guys come on in, buy the asset, turn down the volume, ratchet down the speed, generate that free cash flow so that the balance sheet, so that the income statement looks stronger post the deal. And it's been working for the last couple of years. And that's why you see such a great reaction in the aftermarket when these deals are announced, especially this deal. And also, if you take a look at some of the gas deals that have been done as well.
Hey, Vince, as an investor, do I care about where the rock is located? Is Pennsylvania shale better than Texas shale? How's that all work?
Yes.
Whoa.
Yes.
Yeah, you care?
You care?
Whoa.
Tell me.
Yes, you care. You care because when you're selling a commodity, concentration drives synergies, efficiency, and productivity. But especially so in places like a legacy play like the Permian, or in places like Appalachia or in the Haynesville. Interestingly, these last few deals that we've seen in those plays, those prominent legacy plays, those proven plays where you have a lot of runway and you can buy these assets, integrate them, grow that concentration, and generate those efficiencies, generate that productivity going forward.
Who's next? Who's the next buyer?
You know what? I will tease the audience. Go on to the terminal, look up our research. We put out a piece highlighting the 20 private sponsored E&Ps in the Permian. We go through that list. Mewbourne has been mentioned, so we can throw that name out there, but there are plenty of names in that top 20 list that seem to be putting themselves in a position where some type of capital event could be announced.
Vince, great stuff. Really appreciate it. Deep tease there, everybody. Check out Vincent's research on the Bloomberg Intelligence on the terminal. He's Bloomberg Intelligence Senior Energy Research Analyst. You have to wonder, though, how many buyers they're going to be.
Right.
And
So rock is not rock?
Rock is not rock. Well, rock is rock, but some rock is better than other rock.
Some rock is better than other rock.
Definitely.
Does New Jersey have shale?
Do we have shale?
Yeah, somewhere.
Somewhere. Okay.
You have more gas, don't you?
No, I'm thinking my backyard is what I'm asking.
Is this your second career? Is this what you're going to do when you retire?
He's going to put a rig out there and start fracking. You start fracking.
But you joke, but we're like the only country that lets you, John Tucker, make money off of the oil or gas in your backyard. And the reason why shale didn't take off, say, in other countries that also have that kind of rock is because they don't have that royalty programs. There was a deep incentive for people like you to develop this shale, which is part of what happened over the last 20 years.
But what if the neighbor down the street shoots a pipe that's at an angle and goes for my shale?
They got to pay you.
Oh,
okay. Yeah, that's the thing. We're one of the only countries that do that. So it's actually really quite cool of why this was developed here by those wildcatters.
The wildcatters. I'm just picturing John as like a wildcatter in Texas or Oklahoma.
I actually can see that. I can see that.
See that? Fracking in his backyard.
Just being really grumpy about it or something.
Shooting hot water
up on my porch.
Backyard. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are higher right now. The gains accelerating. S&P 500 on track for another record close. Broad-based fourth quarter earnings beats. They've helped the S&P 500 succession of the record highs right now. VF Corporation, best performing individual stock in the S&P 500. They make those van shoes. Anyway, the owners look like they might shake things up with a revamp of the company. Diamondback Energy, just talking about that, second best performer. That's on the merger news. That is up 10%. And then you have NVIDIA shares rising to a fresh record high to overtake Amazon.com's market cap. The artificial intelligence-driven rally making the chip company the fourth most valuable U.S. stock after Apple, Microsoft, and Alphabet. NVIDIA rising about 2.3%, reaching a market cap of $1.82 trillion. Amazon shares, they are down close to 0.5% right now. Overall market, S&P 500, 12 points higher. That's up 0.25%, 50.38 on the index. The Dow Jones Industrial Average up 140 points. The NASDAQ 100, 36 points higher. That is up 0.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. So you can head over to youtube.com and search Bloomberg Radio. So if you're going to have an ETF conference, you get all the players together, and you're going to do it in February, would you do it in like Cleveland, Sheboygan, Peoria? Or would you do it in Miami Beach?
I would do it in Peoria, but second I do it in Miami.
Miami Beach.
Yeah,
well,
yeah,
that's
that'd
where
be
the
like
smart people. The smart people are down in Miami. They're the ETF folks, and there's a whole gaggle of Bloomberg folks down there. Because why not? It's Miami in February. The team is led by our leader in ETF research. That is Eric Balchunas, senior ETF analyst for Bloomberg Intelligence. He's down there at the Fontainebleau Hotel, which was the dominant, stalwart hotel in the 50s. 60s. They've done an amazing renovation job, and it's back to its former glory, and that's where they're hosting that conference. So, Eric, aside from sunning yourself by the pool and out on the beach, what is the topic that you want to get, I guess, smarter on down there at this conference?
Yeah, I mean, I think the two big topics to me this year are, of course, the spot Bitcoin ETF approvals. I've heard people buzzing about that. I feel like every 3 or 4 years, there's a big trend. Like before the Bitcoin ETFs, it was ESG. And then before that, it was smart beta. Before that, it was just indexing in general. And so right now, I think digital assets are big. I also think the use of derivatives in ETFs is a big topic. Because of a new SEC regulation about 2 years ago, you can now use derivatives a little more creatively. And so people are really sculpting outcomes, and it's opened up a lot of possibilities for targeting outcomes in your returns and whatnot, covered call strategies. So I think like those are the two ways. And honestly, it makes sense, right? A lot of the broad bulk beta areas, like the 60-40, is largely covered. I mean, you can get everything now for like 2 basis points. So there's not a lot to talk about there, not a lot of innovation, but it's the stuff that you can go further with, add-on solutions for advisors, things that do a lot of legwork for them. So they can just click it and have a trade put on or some kind of a hedge so they can go and do what they do best, which is to talk to clients, get new clients, behavioral coaching. So generally speaking, I'd say those are the two big ones. But of course, a lot of topics are covered here. It's to me, this is the Comic-Con of ETFs. This is a 3-day event. Basically, it's a big celebration of ETFs. Everybody's here. This is why we have my whole team down here.
It's also why there's a storm headed for New York, by the way, that's closing schools and doing remote work. But that's cool. So I'm looking at Bitcoin. It's at, 49,000, well over that, the highest level that we've seen since December of 2021. I know it's going to be a rah-rah thing because it's an ETF conference, right? But I'm just wondering what the adoption is for regular people, right? There's going to be like 10% of your portfolio in this stuff. Is it 1 to 2? What's the dream versus reality that everyone's talking about?
Yeah, this is a great question. I think 1 to 2%. To me, for a normal person, a Bitcoin ETF goes in the hot sauce bucket. I wouldn't call it an alternative. Gold is much more stable and less volatile. Bitcoin to me is like a firecracker. But there's a lot of FOMO potential that people want to cure ahead of time because they don't want to see it go to $100,000 and be like, hey, why didn't I put my client in this? So I could see people advisors adding a little just so they don't have to answer questions later. But when you talk to crypto people, they think 1% is like nothing, like my whole portfolio's in this. The 60-40 is like a scam. And I'm like, whoa. So I gotta explain to crypto people that like the 60-40 is great. And you're not going to get a normal person to mess with their stocks and bonds. It's a great deal, and people love the money works for you in both of those categories. So I think 1 to 2% for a normal person, and perhaps if it's a younger investor and they're just really into it, maybe a little higher. But 1% of all the advisory assets is like $300 billion because advisors have 30 trillion. So that's the potential here, in my opinion. I see it going to 100 or 200 billion category. Not quite getting to 300 billion because I think some advisors are just like not going to ever do it. So I think that's kind of where we stand and probably where we're going to find ourselves in 2 or 3 years.
What percentage of investors that are invested in the market, what percentage of them own an ETF, do you think?
It depends on the age. The younger you go, the more your portfolio would be majority ETFs. So millennials, it's like over half.
Really?
When you get to like Gen X, which is my generation, it's something like a third. Because we started with mutual funds back in the 90s when we started investing in 401ks and stuff. And then you go to like boomers and they're like really high into mutual funds. And then silver generation is like all mutual funds. So
whoa.
This is why this industry was one of the silver is like it's like us, Paul. We're getting silver in our hair.
No, you guys are not silver.
This is like,
okay?
no, this is like,
because I don't have an ETF in my portfolio.
Yeah,
I don't think. So I don't know.
So
I mean,
you're probably of the boomer generation.
He is with the boomer generation. Yes.
This is why.
Yeah, barely.
Yeah. So this is why I think ETFs are going to be around for a while because they have time on their side. The generations that are younger use them more. They're more popular. They fit into the digital world better. And so over time, as the boomers, pass on their inheritance, we're going to find ETFs be used more and more by the younger investors in their portfolio. So that's who's using them. That said, there's definitely some people who are interested to shift out of mutual funds, but a lot of people are seeing a lot of capital gains. So mutual fund assets is a lot of captive assets because who wants to realize those gains right now until you have to. So ETFs, again, when new money comes in, though, they tend to go to ETFs over a mutual fund.
So I was looking at some of the people that are going to be there. Is it true that Richard Haas is going to be there, the veteran diplomat, on the stage?
Yeah,
David Kelly. I'm just curious as
yes.
to why like a Richard Haas would be there. I assumed it's just all people like you who like love the ETFs, breathe all the stuff ETFs.
Well, no, you got to entertain the people a little. You got to, it's like Lou Holtz giving a motivational speech, But it's funny you say Richard Haas because, you would put him as I would call like a mid-level celebrity, I guess. Because the first ever ETF conference I went to, this thing's 15 years old. I remember the first night, it was a U2 cover band and an ice cream sundae social. And meanwhile, my hedge fund data colleagues, they were going to Salt, and it was like Obama and Kobe Bryant. And make your own martinis and stuff. So I was like, wow, what a contrast. But obviously, because there's just less money here. So I think, yes, they try to get who they can get, usually get 1 or 2 mid-level celebrities who are able to give something a little different than financial stuff because you've been sitting through that all day. So that's why they would be here, similar to the way Salt would get Kobe, just on like the lower level.
So did you have the ice cream sundae thing, or has that moved on to something else?
They should bring it back. Actually, it was like then it was a Cuban jazz night was like one of them. Like they try to get creative. Last night it was Super Bowl party in the nightclub here in the Fontainebleau. Although Paul says the name better than I do, Fontainebleau. He's like got the pronunciation better.
Fontainebleau.
Fontainebleau. Try spelling it, by the way. Good luck with that. It's got like 3 letters too many. Anyway, they had a huge party in the nightclub. And then there was a rapper having his birthday party there, but that didn't start till midnight. That's how like different level the party scene is here. So I was in bed early though, Alex. That's why I look pretty good for a Monday after the Super Bowl.
All right, so here's the one thing I don't get, which is an oxymoron. An active ETF. Explain that to me.
Yeah, so an ETF is just a wrapper, and it's a tax-efficient wrapper. And so active really likes to come into ETFs now because they can wash out capital gains. Because a mutual fund, one of the problems is you get hit with capital gains even though you just sat there. And so an ETF eliminates that. So active has found a way to keep their active management going, just distributing it in a different wrapper. It'd be very equivalent to a band. You know, the Beatles were late holdouts on iTunes. They just didn't do it for a while.
Yep.
So bands slowly came around. It's like, okay, fine, we'll give you our music to iTunes. Then it was Spotify. Same deal. If you're an active manager and you're picking stocks, why wouldn't you want to be where the people are, where the fish are biting? And so active is smart. They're moving over, and they finally found success. They're getting lower cost. They're doing more legwork. They're adding options to them. Or in the Cathy Wood, they're getting really like active, right? And that can complement a 60-40 core. So active is evolving just fine. It's not dead. And a lot of that evolution is happening in the ETF wrapper. And the mutual funds, I think, are a little old school in, you know, sort of just trying to pick a couple stocks around the S&P. But there's so much innovation and active going on in the ETF space.
Yep. All right, Eric. Thanks so much for joining us. Eric Balchuna, Senior ETF Analyst. Don't forget the sunblock, my friend. He's at Bloomberg Intelligence. He's calling via Zoom from the Fontainebleau Hotel,
There you go. There you go.
South
That's good.
Miami Beach. That's where all the ETF folks are. Go check it out. It's a phenomenal hotel. It's huge, too. Got great pools right on the beach. So I guess if you're going to hold a conference in February, that's a pretty good place to do it. Right now, with our news in New York, here's Michael Barr.
Thank you very much, Paul. Alex, John, a motive remains unclear after a woman in a trench coat opened fire Sunday in Pastor Joel Osteen's megachurch in Texas. Police say 2 off-duty officers working security shot and killed the suspect. 2 other people were also shot and injured, including a 5-year-old boy who is in critical condition. Osteen joined police at a news conference after the shooting.
I can only imagine if it would have happened during the 11 o'clock service. We were in between services going into the Spanish service, so you know, if there's anything good of it, you know what? She didn't get in there and do a whole lot worse damage. So we thank God for that. He's watching over all of us.
Osteen's church is big enough to hold around 16,000 people. Defense Secretary Lloyd Austin was admitted into critical care late last night at Walter Reed Medical Center for a bladder issue. Austin in January had been in for treatment for complications from prostate cancer. A quick-moving storm is set to bring New York City some snow, while areas farther to the north and east, including Boston, may get much more. Manhattan and other parts of the tri-state area will get about 2 to 4 inches by the time it ends early Tuesday afternoon. New York City schools have announced they are going to remote learning tomorrow because of the snowstorm. It's back-to-back Super Bowl wins for the Kansas City Chiefs. They beat the San Francisco 49ers in overtime 25-22 to win. Travis Kelce about his first half animated confrontation with head coach Andy Reid.
Man, I was fired up, man. I was fired up, and we weren't hitting on all cylinders. And I had to give Big Red a love tap there and let him know that we were all here fighting for him no matter what.
49ers head coach Kyle Shanahan.
Well, deal with it the next couple days, next couple weeks, and when it's time to work, which will be sooner than later with how these seasons go, but we'll be ready. We'll come back, and we'll constantly be working on it throughout the whole offseason.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 on track for another record close today. You have 10 of the 11 major industry groups. They are higher right now. Energy is the leader, and healthcare, the only group right now that's in the red in the index. Bloomberg Intelligence writes an exceptionally large 80% of companies exceeded earnings forecasts in the first quarter, tripling forecasts at the start of the season, propelling the S&P 500 to these record heights. Meantime, Lee Farage at State Street Corporation says the backdrop for stocks is a positive one.
We're pushing back to start the rate cuts. We're not removing them. And I think that's the important thing for the equities. There's still this belief that we're going to get this series of rate cuts. It's just they're going to come later. But they're coming later because the economy is stronger. That's a good place to be for risk assets.
Right now, the S&P 500, 20 points higher. That's up 0.4%. 5,046 on the index. The Dow Jones Industrial Average up 209 points. And the NASDAQ 167 points higher. That's up 0.4%. Of course, a big week for data. Tomorrow, we latch onto the Consumer Price Index. That's out at 8:30 Wall Street time tomorrow morning. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Radio here. Boy, as John was just mentioning, you got the Dow up 200 points. I'm on 40,000 watch there. We're 38,800. So I like those nice round numbers. We eclipsed 5,000 a couple of days ago in the S&P, 16,000 on NASDAQ. So we like some round numbers there. Yeah, why not? But I know the pros do it and, you know, do a little bit more analysis than that, than just round
I know,
numbers.
but honestly, if you just bought like an ETF or NDX, you'd be fine.
Exactly. All right, let's check in with Jennifer Oppel. She is the founder and portfolio manager of Alpine Peaks Capital. She joins us via Zoom from New York. Jennifer, what do you make of some of these heights we're hitting here on these markets? I guess it really, you know, started this latest leg back there in November, December last year, kind of continuing into this year. What do you make of these markets and these levels?
Yeah, hi, good morning, Paul and Alex, and thank you so much for having me. It is really interesting. We saw this strength. I think it was really signaled by the Fed signaling, you know, especially in early December, that they were going to start cutting rates. They baked in about 3 rate cuts, as you guys know, for 2024, and a lot of commentators are expecting more. And we did see a lot of that optimism, I think, get priced into the market in December. And so it was interesting in early January to see some names pull back a little. We definitely saw some market volatility, which I think is healthy, by the way. It offers us all opportunity. Today, though, as we're starting to, I mean, it'll be interesting. Tomorrow we get the fresh inflation numbers. So that's probably the best indicator of what the Fed is thinking to do. But, you know, so far as you were just pointing out, companies have been putting up pretty good earnings as they posted for most of them their fourth quarter results. And so that's definitely positive. It's always interesting for people like myself to hear companies actually report their outlooks for 2024 and to get that guidance. I think there's a lot of speculation as to what companies will do, but it's great to hear it from the horse's mouth and actually get the outlook from these companies.
So, Jennifer, we've seen the rally sort of broaden. I appreciate that the equal weighted index for the S&P hasn't had the breakout that the S&P has, but the Russell's up there, industrials, healthcare for the S&P, we're doing really well as well. Do you buy the rally breadth as good or the rally breadth as bad?
Yeah, it's an interesting question where you have some real breakout strength continue in a handful of names. But I think the economy and certainly lower rates will be good broadly for the economy. And so it makes sense to me that we are seeing this more broadly. And that is something that I would expect to continue. Obviously, not universally. It does matter what's happening on a company-specific level, and you do have winners and losers within that. But I think the environment should be supportive for the breadth of the rally, if you will.
So how much or how important is this Federal Reserve for you and your investment outlook here? I kind of feel like You know, the market's really just trading on where the Fed is going. I'm not sure they're just paying as much attention perhaps to the earnings as we typically do. How do you view the Fed and its impact on the market?
Yeah, that's such a good point, and I agree with you. It's interesting. So we have a 5-year average holding period, and so we are taking that longer term view and thinking about our companies across business cycles rather than just what next quarter will look like. But I do think that a lot of people are, focused more on the Fed right now, and particularly getting excited about the prospects of perhaps accelerated rate cuts. We don't think that'll happen as quickly as some people do, but nonetheless, even if you take the 2 to 3 cuts that are kind of at the bottom end of the outlooks, that's still helpful for this coming year. And so it's interesting that we do see, as companies report earnings, we do see them revert more. I feel like there's can be a lot of momentum and excitement priced into names intra-quarter, but we do see them typically return to trading on their own individual outlooks as they report earnings. So that's always a particularly interesting moment of truth for us, if you will.
You have some cool companies that you look at. Rollins, if I said that right. Rollins.
Yeah. You did, yeah.
Pest Control Services, which is ticker ROL. Walk us through why you like this one.
Yeah, absolutely. So they are the leading pest control company, independent pest control company in the United States. Their largest competitor, Terminix, was just bought out by a UK company called Rentokil last year.
Rentokil?
And it's really leading.
Love
Yes.
that. Okay.
Yeah. And it's a compelling time in the industry there's a few broader macro reasons, if you will. Global warming is supportive of pest populations. Demographically too, our generation and younger generations are more likely to hire somebody else to deal with pests rather than do it yourself, as the baby boomers tended to do. And so we're seeing, go ahead.
No, go ahead. Continue.
Okay, excellent. And so it's a good environment for the pests, if you will. And it's a time where Rentokil's always been a really strong competitor in the area. They have really powerful door-to-door sales, have been investing heavily in technology. They also have a very clean balance sheet, and that's enabled them to typically add between a third and half of their growth from acquisitions. And so they continue to roll up smaller pest control companies, share best practices with them over time, be able to really improve margins there. It's created a very positive dynamic. It's also making an interesting transition now from being a family-dominated company. The Rollins family, actually, they just sold off a portion of their stake, but they still own over a third of the company. To bringing in last year was the first year that a non-family member was appointed CEO. And so while the Rollins family has done a great job building the business, I think there is a really interesting switch to a little bit more of a bottom line focused perspective right now there.
We've had aviation when we talk about Boeing, and it's been in the news, not for the good reasons. You have a manufacturer of aviation parts, HEICO, HEI is a ticker. Tell us about that company and why you guys like it.
Yeah, absolutely. So they're a really interesting company. They make what are essentially generic aftermarket aviation parts. So it's almost akin to generic drugs if you think about pharmaceuticals. But in this case, so they take what's called an OEM part, or original equipment manufacturer, and they reverse engineer it to be made out of the same materials, to be able to meet the same stress tolerances, to last just as long and has similar quality. And then that's approved by the FAA. It's called Parts Manufacturing Authority, or PMA is the acronym used in the industry. And then by each individual airlines. And airlines like these parts because they typically sell for, starts at about 30% less than the OEM price, and that can widen out to as much as 70% over the year with volume discounts. And so it's a great way for airlines to save money. And HEICO's really the dominant player in this area. They just bought actually their largest competitor called Wencor. And it's a space they know really well. It's adding about 30% revenue to the company this year. And it's a very exciting time for them. Taking the recovery in air travel that's happened post-pandemic over the last couple of years. And then the market gains they've made as they can help airlines improve their own economics.
Jennifer, great stuff. We really appreciate you joining us. Jennifer Uphold, founder and portfolio manager over at Alpine Peaks Capital. Quite interesting. I love getting into these individual names. I didn't know about the pest control thing.
No. I've heard about Rollins because I knew about the company and the family because everybody's been pitching to kind of get them to sell or to.
I see.
They're well known, very wealthy family. Good story there.
This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company stories we're following. NVIDIA overtook Amazon.com at market value. So this is the latest milestone in a pretty stunning rally over the past year, fueled by soaring demand for its chips used in artificial intelligence computing. NVIDIA rising about 2.9%, reaching a market cap of $1.83 trillion. So that does top Amazon at $1.8 trillion, according to our data. The chip maker now the fourth most valuable U.S. listed company, sitting just below Alphabet, Microsoft, and Apple. And Diamondback Energy surging more than 10% after agreeing to buy fellow Permian Basin driller Endeavor Energy Resources. This is a $26 billion deal that'll create the largest explorer focused exclusively on the Western Hemisphere's busiest oil field. Diamondback again up about 10%. The ticker symbol FANG, FANG. And I just called the company, just got off the phone. Why is the ticker symbol FANG? They had no idea. At least the person.
Diamondback.
Diamondback.
As a snake.
FANG. Oh. Well, they didn't know. Glad you did.
That's amazing.
That was just a guess.
Yeah.
That's
okay.
a good educated guess.
Yeah.
That's perfect.
Also, it sounds cool. Right?
Private equity giants, our next story, have given rainmakers a fresh dose of motivation to deliver cash returns during a deal drought. Carlyle last week followed the lead of larger rivals KKR and Apollo by tying the pay of deal makers and senior employees more closely to the investment outcomes. The firms will transfer a piece of employees' fee income from managing assets to shareholders who prize predictable assets values. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Hope everyone's awake post-Super Bowl. I did watch some of it, which feels like a big win for me. Right now, let's get over to Michael Barr for world and national news.
Thank you very much, Alex, Paul, and thank you very much, John. Remarks from Donald Trump are causing a dust-up in the international community. The former president claims he once threatened to let Russia invade a NATO member if they did not pay their fair share to the alliance.
One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want. You got to pay.
The idea that former President Trump would allow NATO members to be invaded is sparking somewhat of a political storm. Democrats are condemning the remarks, while Republicans like Lindsey Graham and Marco Rubio are defending Trump's rhetoric. The Justice Department was too slow in prosecuting former President Donald Trump over his efforts to overturn the 2020 election. That's what the former top cop on Wall Street, Preet Bharara, is saying in an interview with Bloomberg Markets magazine.
They were very understandably and legitimately focusing on the individuals who stormed the Capitol, who engaged in the rioting, who engaged in violence. So I think a little bit they didn't focus on the potential criminal culpability of Donald Trump and the people around him for instigating an insurrection.
Former U.S. Attorney Preet Bharara says the Justice Department will bear some of the blame if Trump's trials don't end before the 2024 election. A fast-moving storm is set to bring New York City a couple of inches of snow early this week, while areas farther to the north and east, including Boston, may get much more. New York Mayor Eric Adams already announced schools will move to remote learning tomorrow. A larger area across northern Pennsylvania through upstate New York and then into New England may get 6 to 8 inches. Patrick Mahomes, Taylor Swift's boo, Travis Kelce, and head coach Andy Reid have made the Kansas City Chiefs a dynasty. Mahomes threw a 3-yard touchdown pass to Mecole Hardman in overtime. And the Chiefs rallied to beat the 49ers 25-22 on Sunday to become back-to-back Super Bowl champs. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex Paul.
All right, thank you so much, Michael Barr. Here's an interesting story. It came out about an hour and a half ago, but U.S. consumer expectations for inflation over the medium term, so that's like 3 years, fell to the lowest since at least 2013. Nice. A Federal Reserve Bank of New York survey showed the 3-year ahead expectations dropped to 2.35% in January, the lowest on record in nearly 11 years. This feels huge because it was kind of stuck in a rut for a while, and to have that perception move over, like these inflation expectation numbers are what and has in the past over the last few years moved the Fed to hike or not to hike.
Yeah, and I'm looking at the data, nice little chart in this news report, and it peaked really, inflation expectations peaked in like June of 2022, and it's been coming down ever since. My personal, Paul Sweeney, inflation gauge is the daily national average gasoline prices for regular unleaded. We're at $3.19 a barrel, and again, compare that to almost $4 back in, about a year ago, but we were as low as below $3.10, so ticking up a little bit, but still much, much lower than it had been. So that's probably one of the areas. Gasoline is one of the areas where people see it, but the other part, and at least for me, is still in the supermarket.
Yes.
The rate of inflation is coming down dramatically, but you just know what you're paying for today is so much more than what you were paying pre-pandemic. And those numbers, by and large, aren't going down. And they're not going to go down per se. They're just not going to go up by as much for a lot of those products.
So like gasoline stations will lower the gasoline price as gasoline prices go down generally and oil prices go down, but not as fast as when they go up. But in terms of getting my eggs and bacon, like I don't know what the markup is in order for them to stay in business if I go to my Union Market.
So what I understand, talking to Jen Bartashis, who covers the supermarkets, is the commodity stuff like eggs, that does move with the market. So that, and you talk to Ken Felio, our global technical director, who buys eggs by like the gross, they've definitely come down a lot and stuff like that's come down. But some stuff hasn't. And the packaged goods, they're not going to come down.
Yeah, and you pay $8 for popcorn with 4 kernels in it. I mean, not 4, but it feels like less and less and
And
less.
hummus. I mean, God knows what's going on.
I
with
mean, the
hummus.
chickpea.
All right, stay tuned. Joe Matthew, sound on. Next.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
They actually went to work on Super Bowl Sunday. Welcome to the fastest show in politics, just when you thought you've heard it all. This day after the Senate showed up to vote before the game. Advancing funding for Ukraine, Israel, and Taiwan. The bill is still alive with no border deal attached. We'll get the latest on this from Jack Fitzpatrick at Bloomberg Government. He's just here in the Bureau, back from the Capitol with the latest, and we'll have insights from Bill Hoagland at the Bipartisan Policy Center. Donald Trump doubles down on Social Security in new attacks on Nikki Haley, complete with a new ad. Nikki Haley speaking with Bloomberg about that issue today. We're going to have a lot more on that and the rest of the campaign trail with our signature panel. Bloomberg Politics contributors Rick Davis, Jeannie Shanzano are with us for the hour. And we start, as always, with a look at Wall Street. Let's get to it now with our friend Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Happy Monday, back to work Monday, and stocks are ripping higher again, building on last week's gains. Right to the numbers, we've got the S&P 500 index advancing now by 18 points, with the S&P at 5,045. That is a gain right now of 0.4%. Stocks are climbing ahead of data that is expected to show further disinflation, paving the way for the Fed to start cutting interest rates this year. Right now, we've got the Dow up 200, higher by 0.5%. NASDAQ, the composite index, up 66 points. That is a gain right now of 0.4%. 10-year at 4.17%, with a 2-year right now 4.47%. Well, as for the overall market backdrop, specifically the Federal Reserve and the timing of rate cuts, Lee Farage is head of multi-asset strategy at State Street.
We're pushing back the start of the rate cuts. We're not removing them. And I think that's the important thing for the equities. There's still this belief that we're going to get this series of rate cuts. It's just they're going to come later. But they're coming later because the economy is stronger.
And right now we have got West Texas Intermediate crude flat on the day, 76.82. Spot gold down $8, drop there of 0.4%. 10-year again, 4.17%. A mega deal in the oil patch. Diamondback Energy buying fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal. Shares of Diamondback, which uses the ticker FANG, right now up by 10.5%. Today's other big deal, Gilead Sciences buying Sema Bay Therapeutics, a developer of an experimental liver disease drug. Gilead shares, they're up 0.6%. Perhaps the big story, though, shares of Sema Bay, they are up now by just about 25%. And again, recapping, S&P up 17, up 0.4%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we do thank you. Hope you had a great Super Bowl weekend, and we're back to it here in Washington. Welcome to the Monday edition of Balance of Power. I'm Joe Matthew. We'll have Kaylee Lyons with us next hour here on Bloomberg Radio, on the satellite, and on YouTube, where we invite you to join us every day. We're live on YouTube right now. Search Bloomberg Global News. That's what all the kids are doing. Kind of amazing to see senators working on Super Bowl Sunday. It actually happened. They weren't there during the game, but they showed up when you were probably getting your guacamole and chips ready. And they did advance this bill. It hasn't passed the full Senate, but they had a procedural vote, and it went pretty well for those looking to help fund our allies in Ukraine, Israel, and Taiwan. 67-27. A lot of folks think this could pass the full Senate, and that would happen no later than Wednesday. And we're right back to where we were on Friday with the same question, what happens when it goes to the House? I guess it's a good thing, though, that they didn't have to, get up early and go to work today, as I read on the terminal, that this is one of the least productive work days of the year because of the football game. Jack Fitzpatrick came to work. He's with us now from Bloomberg Government. You saw the game. You came in, right?
I'm here.
They say even those who will, because 16 million people will skip work today. The rest of us will be much less productive, apparently, because of the choices we made last night. I hope you're feeling okay.
And yet the Senate is actually going to work late. They can't vote until 8:30 or so, so they're working hard on Sunday and then working late on Monday.
That is kind of a big deal, though, for Chuck Schumer to pull everybody together on a Super Bowl Sunday to make this happen. Would that suggest that it will pass the full Senate?
I mean, the fact that they've gotten 67 votes on 2 procedural votes at this point, that may be more of a ceiling than a floor. People still could get upset if they don't get an amendment vote they were seeking, that kind of thing. But clearing 60 twice on 2 key procedural votes, I mean, clearly this is moving slowly because there are members who won't give unanimous consent.
Right.
But they look like they can get this through the Senate. The question then is also how much momentum does it have going into the House? 67 is not 80 or 90.
Fair enough.
The House issues are still there.
Fair enough. Before we move to the House, there were questions last week about amendments, how that might slow things down, whether there might be some border-related provisions that are added to this. And then there was a man named Rand Paul who wanted to block this or slow it down to the extent that he could. Is that why we're not getting unanimous consent?
Yes, Rand Paul is at least one reason why we don't have unanimous consent. If you've got one person saying he's not going to agree, it's kind of a moot point how many people aren't agreeing. So they're going through step by step. Chuck Schumer has still said he would like an agreement on which amendments could get votes, but if there's not a unanimous consent agreement, it's unclear what the path forward is, other than it's going to be slowed down, and then they can force a final vote, it looks like Wednesday. So, do they increase support between now and then? Is there a rallying cry? Are there further amendment votes? Any way to improve it from members' perspectives? That's what's unclear, because usually when they have an important bill, they find a way to get unanimous consent and get everybody to agree on the slate of amendment votes, but that is not happening here.
Not going to happen. And when it goes to the House, knowing 18, I believe, Republican senators voted yes in this last round, is that
last one I checked
here?
was 17.
17?
We've had a little back and forth.
A discharge petition in the House requires 218. I'm comparing apples and oranges here, but you talked about momentum. You get 80 or 90. Are we in a world in which a discharge petition, I know this is wonky stuff, could actually work around Speaker Johnson if he doesn't want to bring this to the floor and supporters who back it do?
I mean, first, a discharge petition usually is useful if the leadership wants an excuse to end up supporting something.
Got it.
If you force their hand and then they can say, oh, you forced my hand.
Yeah.
The fact that there's been some pushback or at least skepticism, we talked last week about Mike Rogers, the House Armed Services Chair, saying if we don't have an immigration deal, and we don't, it's not clear how you can move this forward. There's not a huge push in the House right now from even the most supportive members. That's the big issue, because if the leadership aligned and sort of neoconservative hawks of the party aren't making a major push, the options for a discharge petition are an uphill battle.
So it's entirely likely this thing passes the Senate and it just goes nowhere after that then, right?
That may be the most likely option. It's hard to make a prediction here. Again, how much momentum it has coming out of the Senate, how much pressure is put on leadership, on key committee leaders like Mike Rogers and other people who are supportive of this kind of bill. That's the big X factor here. But it is a much heavier lift in the House than it has been in the Senate, where it's, 67 isn't way more than 60. They need 60. They're getting 67. Again, it's not 80 or 90.
3 weeks to my count till the government shut down. No one's talking about it. I keep asking people about it, like, oh, no, they're going to figure it out. But then it's going to be 2 weeks, then it's going to be 1 week, and what's going to happen?
Yeah, it's easy to lose track of time, because that is March 1st for the first partial shutdown deadline, and then March 8th. I've been asking consistently the subcommittee leaders who are supposed to write the bills to get this done. Generally, they say it's going pretty well, but the big hurdle is there's not a grand agreement to set aside major policy fights. Usually when they get an omnibus or some sort of means of funding the government, initially they say, all right, we're not going to legislate on abortion
Connection
access
lost.
or immigration or any of the other many really tough issues, we're just going to do our best to agree to funding levels. They have not had that kind of conversation, so any number of really tough issues could trip them up. But what I've heard from members is they have not gotten tripped up yet, and they're being productive.
All right, optimism still alive. Great to see you, Jack. I hope you find a chance to recuperate at some point today. They're working late, like you said, 8:30 tonight. And Jack will be with them, as always. At Bloomberg Government, Congress reporter and frequent voice on this program, Balance of Power. Let's add the voice of Bill Hoagland. We wanted to go to the Bipartisan Policy Center for a bit of a reality check in what's happening here, because the two chambers don't agree. And, of course, we can get inside divisions within the individual caucuses as well. But Bill's been watching this for a couple of minutes, you might say, following his experience in the Senate. And it's good to have you back, Bill. I hope you've recovered from the game. Not too often you see senators at work on a Super Bowl Sunday. Were you encouraged?
Yes, this was the first one. I believe it's the first time they've ever worked on a Super Bowl Sunday, but of course they adjourned in time to at least see the at least second half of the Super Bowl, as I understand.
Well, God bless them. Now they've got some real work to do this week. Do you see this bill following the procedural votes that have already occurred? And I know there are more to follow. They have to get the shell bill and do some other wonky stuff. But when this reaches the floor, will it pass?
I've lost you. I can't hear you.
Oh, I'm sorry, Bill. If you can hear me now, I'm just wondering your thoughts on what happens when this reaches the floor of the Senate. Sounds like
yes,
we might not
I think
have
if
Bill.
I heard you correctly, that Senate will pass this supplemental. Likely it'll have to go all the way to Wednesday. They're still trying to work out a set of amendments and may not have any amendments, but the 30 hours post the vote on Sunday will run out on Wednesday. And by then they will pass it. It's clear it's going to go over to the House. Now, the question, as you've raised in your earlier comments about what will happen in the House, is still very much up in the air. I think the new Speaker is trying to figure out himself as to what strategy he wants to pursue. I believe that there are clearly, if it was put to a vote in the House of Representatives, it would overwhelmingly pass. So there are various approaches he could take, but you mentioned one of them, which was a discharge petition. I think there will be the votes there for a discard petition, subject to whether or not the Speaker has an alternative that he wants to bring it to the floor. But it will get, I'm truly expect it to make it to the floor at some point. Now, the other option is for him to simply strip it all out and send it back to the Senate, and the Senate amend it, and then it comes back. So it will get there, I believe, at the end of the day, though it's going to take a little bit of a struggle. And of course, the Senate goes out here after they pass this on Wednesday or whenever they get around to passing it, and they'll be out until after for a week or another week and a half. And then, of course, this House is out for President's Day recess starting next week for 2 weeks. So there's not a lot of time here to get this done, but I'm an optimist on this one today.
Well, this is a familiar feeling, Bill Hoagland. He's with us from the Bipartisan Policy Center. Hope you can hear me a little bit better now, Bill, because I want to ask you about Mitch McConnell. Really something watching him try to push this legislation and also cope with reality at the same time, and his frustration is pretty clear, as he said, to lament the commitment that has underpinned the longest drought of great power conflict in human history. This is idle work for idle minds, and it has no place in the U.S. Senate. He's talking about what he refers to as how it's become quite fashionable to disregard the global interests we have as a global power. Is Mitch McConnell going to be disappointed at the end of this bill?
Again, I had a little difficulty hearing your question, but if I understood it correctly, there's a power play going on here in Washington. Clearly, it's no question, but the election is a driving factor for policies decisions right now. An election year, it always is difficult to get policy done. But I am rather discouraged as an old Senate staffer that we're letting politics play such a big role in such things as the immigration bill last week, which was a bipartisan effort on the part of some good senators in the United States, both Republicans and Democrats, to bring something to the floor. I'm a little discouraged about the degree to which the potential presidential nominee, Mr. Trump, is having such an impact upon policies right now when action should be taking place and we should be legislating and putting off at least until after the election as to what the next policy should be.
You think we're going to have a government shutdown next month?
That's a good question. I do think that we hit. We've already run out of time here, as I said. That March 1st date is coming very quickly, at least on the four bills that have to be done by March 1st. At this particular moment, I'm getting to anticipate, since there's very little that's happened in the way of actually acting on those bills in the House and the Senate, that we're probably looking at another kicking the can, both on the March 1st and the March 8th. I'm one of those who really believes that a government shutdown, particularly in an election year, benefits no one, no political party. And so I do think we're looking at another continuation or resolution, at least until the end of April, when certain things start to really happen under the new Fiscal Responsibility Act that was adopted last year, which means across-the-board cuts beginning in April. So I do think they're going to try to get these bills done, but they're not going to get them done by March the 1st right now, given the schedules that recesses and the president's recess and other things that are going on.
Donald Trump has had a heavy hand over these negotiations without even being on Capitol Hill. Bill, to what extent do you think he'll impact a final product here when it comes to Ukraine specifically?
Well, I think we've already started to see the impact that he has had on such things as the immigration bill last week that was brought to the floor. I believe that post Super Tuesday, when he should have, if Mr. Trump does at that particular point, the former president have the requisite number of electoral votes delegate locked in, that it will now become basically his policies for the rest of, for Republicans that are towing to his reelection. It will really make it very difficult to get any bipartisan work done here. Keep in mind that we also have a situation here, of course, as you know, we have an election tomorrow, and Mr. Santos's position being up for election. That, last time I looked at the polls, would indicate that that might flip to a Democratic seat, which would really change make it even more difficult for Mr. Johnson to get work done. So I want to be an optimist, but I can tell you right now that politics are really starting to dominate this whole agenda, legislative agenda for the rest of the year. And as one who still believes that we have to legislate even in an election year, this is very disappointing to me.
Yeah, it's hard to ignore. Bill Hoagland, great to see you, Bill. Many thanks for the insights today, and thanks to the internet gods for keeping us talking here. The start of our Monday edition. We've got a lot more where this came from, and we're going to turn to the campaign trail straight ahead. More on the Trump effect and a response from Nikki Haley. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Bitcoin at $50,000 for the first time since December 2021. That headline right now on the Bloomberg Professional Service. Bitcoin right now 49,813, bumping around up today by 3.5%. Moments ago, though, Bitcoin back above $50,000 briefly. The Dow, the S&P, NASDAQ all advancing today, very close to session highs on the S&P 500 index. Right now, the S&P is up 18 at 5,045, up by 0.4%. Dow Industrial is up now by 0.5%, up 200 points, while NASDAQ is up 56 for the NASDAQ Composite Index. That is a gain now of just about 0.4%. 10-year yield 4.17%, 2-year 4.46%. Gold down $8 the ounce. 2016 drop there of 0.4%, and West Texas Intermediate crude down 0.1%, 76.75 a barrel. Federal Reserve has slapped Citigroup with a series of demands to change the way it measures the risk of its trading partners. This, according to a Reuters report. It is the latest blow to CEO Jane Fraser's turnaround effort. Citigroup shares are up 0.2%. Again, recapping, stocks are higher. We've got Bitcoin trading very close, actually right now 50,000 even. That is a gain of 3.9%. S&P up by 0.3%. I'm Charlie Pellet in New York. Back we go. Balance of Power continues. Here he is in Washington, Joe Matthew.
All right, Charlie, we thank you. Thanks for being with us on Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube. Search Bloomberg Global News on YouTube if you want to find us. The cameras are lit here. We've always got a chair for you in the studio. So how about that? Charlie Pellet with $50,000 for Bitcoin. Just a session after S&P 5,000. Joe Biden won't be tweeting about either of them, or Xing. But it did dawn on me as I was listening to that. What about Dark Brandon? Is that not a way around this? I hope Kaylee's listening. Dark Brandon could be tweeting crypto all day long. It's a separate account. And people seem to have a lot of patience for him. You saw he was tweeting last night after the Super Bowl. Maybe you didn't, but the Taylor Swift conspiracy, by the way, is still alive. That did not come up in our conversation earlier today with Nikki Haley. She sat down with our colleagues on Bloomberg Surveillance, remembering that Social Security has become a very interesting sticking point in this campaign between the two. We couldn't get out of New Hampshire without seeing the advertisement that Donald Trump ran using Bloomberg's earlier conversation with Nikki Haley, without seeing it 100 times in every commercial break. And there's a new ad, in fact. He came out with a football-related ad just yesterday as he beats the drum on comments that Nikki Haley made here on this network about potentially raising the age for Social Security. This, of course, came up with my colleagues John Farrow, Lisa Abramowitz, and Anne-Marie Hordern when they spoke with Nikki Haley earlier today. We're going to give this a listen and spend some time with Christian Hall, our campaign reporter who spent many, many days in South Carolina leading up to this. So let's hear from first Nikki Haley, of course, Republican presidential candidate now on Bloomberg. Here she is.
What I said is we should not ever take away from those who have invested in and those who have been promised. America should always keep their promises. I said we should go and change the rules for those in their 20s. That's the problem. Those in their 20s, like my kids, for them, we should change the retirement age to life expectancy. Instead of cost of living increases, we should do increases based on inflation. We should cap the benefits on the mega wealthy, and we should expand Medicare Advantage plans. What Donald Trump wants to do is he doesn't want to touch it so that when Social Security goes bankrupt in 10 years, everybody gets a 24% cut across the board. That's not how you handle a problem. I'm going to count it. The thing you do is you get in front of the problem. When we make those changes, that's when you start focusing on what it takes to make sure not only does everybody who've paid and keep what they get, but you make sure that our kids will actually have something when the time comes for them as well. We have to take that seriously, and we have to stop having Congress raid the Social Security accounts. Right now, they're raiding all of those accounts instead of stopping the wasteful spending. We'll stop the spending, stop the borrowing, eliminate the pet projects, and I'll veto any spending bill that doesn't take us back to pre-COVID levels.
Ambassador, do you still think 65 is way too low when it comes to retirement?
I think it depends. We need to go and look at the numbers and see exactly where it should be. I think right now we do know that people are living longer. What the age should be depends. But for everybody that's paid in the system, the age is 65. That will stay 65. For those in their 20s, that's where we're going to have to go and look and say, what's the right age for us to do that? We can solve this problem. People don't have to live in fear that they're going to lose their Social Security, but we need to be honest with them. Communicate to them that Social Security will go bankrupt in 10 years. Communicate to them that Medicare will go bankrupt in 8. And let them know that we're going to find a way to make sure they keep what they have, but we're going to have to make changes going forward so that we can start to make sure these things are solvent.
In 10 years, just changing some of the respect to 20-year-olds isn't going to necessarily change the equation financially in terms of making Social Security more sustainable. So what else could you do in the near term to make this sustainable?
Well, right now, Joe Biden and Donald Trump are saying they're not going to do anything, which means you're going to have a 24% cap, a 24% cut in 10 years. At least I'm willing to do something about it. At least I'm willing to tell the American people the truth, that there is a problem and that we're going to fix it. So the thing is, you start with that. You also start with cutting out the wasteful spending that's happened from Republicans and Democrats. We saw that $2.2 trillion COVID stimulus bill that passed with no accountability, that's now expanded welfare, that's left us with 80 million Americans on Medicaid, 42 million Americans on food stamps. That's a third of our country. And instead of Republicans doubling down and trying to make something right, they opened up pet projects and earmarks for the first time in 10 years, pushing through 7,000 of them last year. You've got to stop that. The other ways we're going to do it is we're going to take as many programs in the federal government as we can and pass them down to the state level. That will dramatically reduce the size of the federal government, but it will empower people on the ground. Think education, think welfare, think healthcare, think mental health. When you go and cut those strings and allow that to go down to the people, you're reducing the size of the bloated government we have. Everybody loves to talk about how great the economy was under Donald Trump. Well, yeah, it seemed great. But at what cost? Well, he put us $8 trillion in debt in just 4 years. Joe Biden went and doubled down and put us even more in debt. That's not how you fix the economy. That's how you go and leave younger generations in a situation they'll never be able to pull out of.
Nikki Haley, earlier today on Bloomberg Surveillance, in a fascinating conversation. At least I'm willing to do something about Social Security. Is it working? I'm assuming that it's testing well if he keeps at it like this.
Well, I mean, it is a very controversial issue within the Republican Party, but as well as the Democratic Party. I mean, Republicans understand that there are things that should change about the Social Security program. There are a lot of questions about funding long term. But I think what we're seeing is that a lot of candidates, and Donald Trump is realizing that Republicans are concerned about talking about the issue because they do not want to disenfranchise older voters. Social Security is very highly valued by older voters. And I think Donald Trump is realizing that with the electorate, the Republican electorate, especially older voters, that this is an issue that will make some a little bit weary of supporting Nikki Haley. So I think that he has seen that this is an issue that resonates with a large part of the electorate, and that's why he keeps going at it.
It's been a bit of a clinic in the making of an ad. Christian, I asked Nikki Haley about Social Security back in August. I believe it was the 24th. That one clip of me asking her and having her refer to raising the age fueled ads all the way through Iowa and New Hampshire. And just yesterday, the Trump campaign put up another one. It's a 60-second ad with the whole Super Bowl football theme. And again, it includes, and they say, let's go back and review the tape. And there's me asking Nikki Haley again, you only have to say something once for it to dog you for the rest of the campaign. Is that the lesson?
Oh, absolutely. I mean, this issue of Social Security isn't new. I mean, if we looked at one of the earlier debates, it became a huge talking point in the debate. And it was a way that Ron DeSantis, who has since dropped out of the race, distinguished himself from Nikki Haley. And it gained him a lot of political capital. And there was a lot of chatter about what raising the Social Security retirement age could do for Republicans as they are, in the minority in the Senate, and barely holding on to a majority in the House, right? They do not want these ads of them backing going after older people, right? Going after the retirement age. So, yeah, I mean, it will stick with you throughout the campaign, and it's definitely shown that with Nikki Haley.
If you're with us on YouTube, you can see this ad that we're talking about here, the football ad about Social Security that dropped yesterday. And, you know, again, if you were with us a few moments ago, you heard Nikki Haley come back around on that issue as she tries to refine her position here. Pretty amazing looking at the numbers in North Carolina, Christian. She still stands to lose by quite a lot in her home state, no?
Yeah, I mean, the polling right now does not look good for Nikki Haley, and the stakes could not be any higher. I think we are seeing a new chapter in this race. We're seeing the attacks coming out from both sides very hard, from President Trump and also Nikki Haley. The stakes are very high, and the polling is not looking very good in favor of Nikki Haley.
Mm-hmm. No, that's for sure. The most recent came from Morning Consult, and it's a more than 30-point spread. Christian, great to have you. Great reporting. Always appreciate spending some time with Christian Hall from the Bloomberg Politics team that has been on the trail for months now as we finally get to voting in South Carolina. We'll be talking to Christian more, I like to think. Let's bring you up to date. Before we assemble our panel, Rick and Jeannie are with us this Monday, and we check world and national news right now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Israel has launched more airstrikes in Rafah along the border with Egypt. More than 1 million people have gathered in Rafah to seek refuge from the war against Hamas. Palestinian news sources cite health officials in Gaza who say dozens have died in the latest series of strikes. On the plus side, there's word that Israel did carry out a special forces operation in Rafah that freed 2 Israeli hostages. The men are being treated at Sheba Medical Center, where Professor Arnon Afek is acting director.
To see them joining with their families, with their loved one. For months, I haven't seen them. Remember, there is a 70-year-old person there and a 60-year-old person. They are not young. These are the people who were kidnapped from Israel.
President Biden, in a call yesterday with Israeli Prime Minister Netanyahu, urged him to abide by a credible plan to shield civilians in those attacks on Rafah. The Justice Department was too slow in prosecuting former President Trump over his efforts to overturn the 2020 election. That's what the former top cop on Wall Street, Preet Bharara, is saying in an interview with Bloomberg Markets magazine. He says the DOJ should have started right after January 6th.
When the January 6th committee in the Congress started doing its work a year or two later and had very explosive testimony from a lot of people, most notably Cassidy Hutchinson. It's my sense, and some of the reporting bears this out, that's when the Department of Justice got into gear and said, wow, we maybe need to very forcefully and aggressively look at the conduct of the former president himself. But they lost like a year in that delay.
Former U.S. Attorney Preet Bharara. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
From Bloomberg World Headquarters, I'm Charlie Pellet. 1240 on Wall Street. We have got Bitcoin with a 50,000 handle. Bitcoin right now at 49,963, just dipping just like that below 50,000. Did climb above that big number earlier today, moving back to where it was. The biggest gain for Bitcoin since last we saw that was back in 2021 on Bitcoin. Right now, up $1,800, 49,931 on Bitcoin, up right now by about 3.8%. S&P 500 index keeps on going, now at 5,042, up 0.3%. The Dow up 171, 38,843, up by 0.5%. Nasdaq Composite Index up 53, gain there of 0.3%. 10-year at 4.16%, with the 2-year 4.46%. The new week brings fresh data on inflation, beginning with household costs. And with that story, here's Bloomberg's Vinny Del Giudice.
We'll get the Consumer Price Index Tuesday. Inflation has been slowing after the post-pandemic breakout, and Bloomberg Economics says January's data could reflect some moderation in labor costs. Federal Reserve officials indicate they want more inflation data before cutting interest rates. The government will also issue 2 other inflation reports, the Import Price Index Thursday and the Producer Price Index Friday. Vinny Del Giudice, Bloomberg Radio.
Spot gold down $7 the ounce to 2017, down 0.3%. West Texas Intermediate crude, little change, down 7 cents, 76.78 a barrel on WTI. Diamondback Energy is buying fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator that is focused on the Permian Basin. Shares of Diamondback, they are surging today by 9.6%. The other major deal today involves Gilead Sciences. It is buying Sema Bay Therapeutics, a developer of an experimental liver disease drug, $4.3 billion in equity value there. Gilead, little changed, up by about 0.6%. The big story, though, Sema Bay, it is surging by 25%. Recapping, Bitcoin rises to $50,000 for the first time since December 2021. S&P up 15, up 0.3. I'm Charlie Pellet. Joe Matthew in Washington. That is a Bloomberg Business Flash.
All right, Charlie Pellet, we thank you. Welcome to the Friday edition. Oh, hopeful, wishful thinking. The Monday edition of Balance of Power. Listen to Charlie Pellet. S&P 5,000, Bitcoin 50,000. What else do you want on a Monday? I know, the day after the Super Bowl off. And it sure seems like we could accomplish that easily if we just did it a little bit later, night before President's Day. Can everybody get behind that? Wouldn't lose all the productivity at work, have all the people pretend to be sick and the bleary eyes that I see in some newsrooms. I'm Joe Matthew in Washington. Glad you're with us. Whether you're at work or not, you know where to find us on the radio, on the satellite, and on YouTube. Search Bloomberg Global News. Interesting reading the write-ups on the Trump-NATO comments this morning. Shudders, I read, across Europe. The way the Washington Post put it, tremors, the word they chose, across Washington and in European countries, already worried about America's reliability as an ally in a potential second Trump administration. This was in South Conway, South Carolina, where the former president made the remarks about countries paying their fair share, if I can use that phrase, to NATO. And he took it a step further. Here he is from South Carolina. Let's listen.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
Whatever the hell they want, the line that is still echoing across Washington and European capitals as we assemble our panel. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors. Jeannie, it's great to have you back. We missed you at the end of last week. This is the kind of stuff that Joe Biden is talking about, but if you read the polls, voters would suggest to you that this kind of talk doesn't matter. We saw this side of Donald Trump in a first administration. It doesn't seem to bother a lot of Republicans about a second one, does it?
It doesn't so far. But first of all, can we just clarify that NATO is not some kind of golf course where you pay dues? So right there, he is factually wrong. I'm not sure if that matters. Number two, the irony of this coming from a man who famously doesn't pay people in his own businesses and his vendors. So, so much of this just rings narcissism. But you get to the reality of the facts on the ground. And this is what he has been saying and promising for some time, this threat of moving us out of NATO, of weakening NATO. Yeah. And that's why so many people, including the Wall Street Journal editorial page, are responding so forcefully because, of course, from our founding, we have depended on allies to help us achieve our national security and economic goals. Without those allies, how do we combat China, for instance, in the China Sea? How do we combat the Houthis in the Middle East? We depend on allies. And of course, how do we combat Putin as he tries to move into Europe? So we do have to take him at his word, even though factually it is wildly incorrect what he's saying.
Well, I have to be honest with you, Rick. I wonder if he even said it, right? This does sound like somebody who's showing off at a party, trying to impress his friends. Yeah, I said whatever the hell they want. I don't know what version of it was said, but when you draw a response from the Secretary General at NATO, you're rattling cages here. Jens Stoltenberg says any suggestion allies will not defend each other undermines all of our security, including that of the U.S. What's your reaction?
Yeah, look, I think Jens Stoltenberg has the right approach. Look, and I wouldn't worry about it so much, these sort of hyperbolic things that Donald Trump says, except for the fact that he actually acts on them. I mean, when he was president, he did cuddle up to his favorite dictator, Vladimir Putin, and everything we've learned about him is that he puts our enemies ahead of our allies, and this is just another example of that. And he does it in tangible ways. So, yeah, I mean, maybe it's just, quote, like he likes to use, locker room talk, showing off at a cocktail party. But the reality is it's borne out by our experience. And this is a lot different than in the old days of complaining that the UN doesn't use our funding successfully and that we ought to withhold it until they're more efficient. This is a security program based on all our self-interests. The countries within NATO protect one another, and together they are a much more significant force than any of their individual economies or militaries. And so maybe he just doesn't understand the basic concept behind NATO, but the problem is if he doesn't understand it by now after being commander-in-chief for 4 years, then why in the world will we think he would abide by it in the future?
Nikki Haley was asked about it on Bloomberg this morning. Jeannie, she said it's a mistake for Trump to side with Putin over our allies. Isn't this a big opportunity for her as his former UN ambassador to draw a contrast?
It absolutely is. And Joe Matthew, I'm surprised you don't believe that some, leader of a big European country didn't stand up and say, "Dear Sir Donald Trump, do you believe this?" I mean, from start to finish, this fake story is amusing. If it wasn't so serious, and to your point, Nikki Haley does have an opportunity here to make it clear, and this is what I think is missing in all of this, is Donald Trump, as usual, is reflecting the view of a good segment of the Republican Party on the far right that has long been isolationist. And you can talk to people today, they don't, know about how much, who owes what to where, but they do have a question as to why when we're suffering at home, our money should be going abroad. And that is something that Nikki Haley and others in the Republican and Democratic Party, including our president, have got to explain. Why is it in our interest to send this money to help Ukraine in this fight? And they can start with the simple fact that NATO has over 50% of the GDP in the world. So there are facts on the ground to support what we're doing. It's in our interest, but you can't expect people to know that if you don't explain it.
Well, I'd love to hear from Rick as well on how Nikki Haley can seize on this opportunity, and we'll have more time with Rick Davis and Jeannie Shanzano straight ahead. With an eye on the campaign trail, guess who's the latest on TikTok, by the way? It's not Donald Trump, Joe Biden, keeping it young, and we'll talk about the strategy, if there is one behind that, following an interesting night for football and politics. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got a mega deal today in the oil patch. Diamondback Energy has agreed to buy fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator focused on the prolific Permian Basin. It is the latest in a string of Permian deals as companies push to line up future drilling sites and cut costs. But it also raises the question of who's left. Javier Blas covers the energy industry for Bloomberg Opinion.
I think that we can still see more consolidation in the Permian. We have seen the biggest deals, the most obvious ones, some of them family-owned companies that they wanted to cash out, or they have a transition at the head of the families. But I think that there are still too many Permian companies in the kind of range of 250,000 barrels a day that they need to combine among themselves. So I don't think that we are done. I think that we are going to still see big numbers of consolidation, but perhaps the biggest tickets, we have already seen them.
And that's Bloomberg's Javier Blas. Today, shares of Diamondback, which uses the ticker FANG, F-A-N-G, up by 9.6%. Endeavor, by the way, not publicly traded, but both companies are based in Midland, Texas. Hewlett-Packard Enterprise is seeking as much as $4 billion from Autonomy Corp's former bosses following a London judge's finding that they fraudulently boosted the value of the company before it sailed. Today, Hewlett-Packard Enterprise up by 1.1%. And Blackstone plans to merge a pair of warehouse landlords it took private to create one of the UK's largest owners of industrial property. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
This day after the big game, you know, they call it the big game in broadcast commercials because they're not allowed to call it the Super Bowl. It's just funny for me every year to watch them dance around that. You know, there was a big conspiracy wrapped around this game, and it was not about RFK Jr., although what I'm reading in the Twitter sphere this morning might make you think otherwise. We might have to do a lightning round. There's so much to cover here with Rick Davis and Jeannie Shanzano from The Trail. RFK Jr. now publicly apologizing to his family members after this ad last night. Did you see this? A $7 million ad. That's what 30 seconds cost in the game here. That was apparently made by a super PAC. And of course, a campaign would never communicate or collude with the super PAC. And it played off a famous ad for his uncle, JFK, back in 1960. If you were looking at this with one eye or maybe through beer goggles, you might have mistaken RFK for JFK. And that ballot confusion has been a concern for Democrats. Let's bring in Rick and Jeannie for more on this. Rick, was that the most shrewd thing you've ever seen or an actual accident?
Well, I don't think there are accidents in politics. And so I'd have to veer towards shrewd. And I'm not sure shrewd is particularly a good outcome for him. I mean, obviously, we're all talking about him today. Super PAC spent $7 million to try and blur those lines between RFK and JFK. But the bottom line is it reminds us, because the family is speaking out in angst about this, that he is not supported by the Kennedy family members. In fact, they have a very negative attitude toward RFK Jr. And so it's kind of a mixed message today. Yeah, sure, we're talking about him, but it's not in the most positive way. So I think that it's kind of a half good, half bad outcome for him.
Did he confuse a bunch of people to his own benefit last night, Jeannie?
Yeah, you know, I think of that old Ronald Reagan adage, you know, they're just going to see you. They're not going to listen to what you say. They'll look him up. They might be interested. They might not. So it probably, helped him in the end. Anybody who looks into it closely knows, of course, what Rick was saying, that the family has not been supportive of this run. But it did bring up a lot of nostalgia in terms of thinking about the Kennedy, phenomenon and the Kennedy administration. And that for many people is a very attractive thing. And a lot of young people, they don't remember it personally. And this gets them to go think about it.
Well, it's interesting. He tweeted, "I'm so sorry if the Super Bowl ad caused anyone in my family pain who was created and aired by American Values Super PAC without any involvement or approval by my campaign." Meanwhile, it's still pinned to the top of his newsfeed. I'm looking at it right now, so I guess weigh in as you would expect. Now, remember, there was a conspiracy theory going into this campaign, not including RFK Jr. It was Taylor Swift, right? Her boyfriend on the field. She was part of some psyop from the Pentagon in which she would get a boyfriend on the team and then on the Super Bowl night come down and endorse Joe Biden in front of the nation. That never happened, but the Chiefs did win. And so we got a tweet last night from Joe Biden. This is candidate Biden, not the president. And it's dark branded. He's got the lasers coming out of his eyes. And all it says is, "Just like we drew it up." Pretty clever, Rick. But we also learned yesterday that the president got on TikTok. And I thought that was a no-no. Will that help young things up for Joe Biden?
Well, he needs all the younging up he can get. And so, yeah, I think it's a helpful thing. He said a year ago he wasn't going to do it. He's signed an executive order saying no federal employees can have it on their phone. So I guess he's going to be using his personal phone to be doing all these tweets, TikToks, and otherwise.
What do you think about that, Jeannie? Young people might reward him for it, but it's pretty hypocritical. Is it not the definition of contradiction?
It is. I love the younging it up. That's a good idea. And I liked how the Biden team had to tell the media that he will not be running this himself. It's going to be done by the campaign, as if anybody had any question on that.
Well, maybe he learned something from Vivek Ramaswamy. It worked well for that campaign. Rick Davis and Jeannie Shanzano are back with us next hour, and you know who's on the way in. Kaylee Lyons. Hour 2 of Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Biden urges Israel to protect civilians as the IDF turns south. Welcome to the fastest show in politics. With more tension here for the Biden administration and for Benjamin Netanyahu with new strikes along the Egyptian border and the release now, the rescue of 2 more hostages. Kaylee Lyons, this is a very tense situation as the president today welcomes the King of Jordan to the White House.
Yep, King Abdullah II is actually at the White House today. We will hear from him and the president within the next few hours. And of course, Gaza is going to be very much top of mind for an Arab leader at a time where the Biden administration is getting more pointed in some of its criticism toward Israel and its approach to civilian Palestinian life. Biden, of course, have said Israel should not proceed with this operation in Gaza unless they have a credible and executable plan for civilian safety and support. But Netanyahu over the weekend seemed to be pushing back against that to a certain degree.
That's true. We'll hear from him in a moment, and we'll talk about it with Hagar Shamali, former director for Syria and Lebanon at the National Security Council. She knows what it's like to be inside the White House at a time like this.
Absolutely. And of course, given she was at the NSC, I'm sure she has thoughts as well on the remarks we got from former President Trump over the weekend about potentially encouraging Russia to do, quote, whatever the hell it wants with NATO allies. We're going to get thoughts from her on that.
I can only imagine. We'll have analysis, of course, from Rick Davis and Jeannie Shanzano. Everyone came to work this day after the Super Bowl. I'm reading on the terminal that that's not the case in every office, Kaylee.
16 million people call out sick today?
Imagine that. And the rest of us who do come to work apparently are less productive because of the choices we made last night.
I am indeed having extra caffeine, and I bet Charlie Pellet is too. He's got to check on the markets for us on this day after the Super Bowl. Charlie, how you feeling?
I'm feeling the pain. Rough start to the morning today. Stayed up way too late, but I tell you, it was worth it. All the excitement on that halftime show. Love it, love it, love it. Here's what's going on with markets right now. We have got the Dow, the S&P, NASDAQ, all advancing right now. 18-point gain for the S&P. Very close to session highs right now. 5,045, up by about 0.4%. Dow Industrials up 210 now, up by about 0.5%. We've got NASDAQ up 67, higher by about 0.4%. 10-year, 4.16% with the 2-year, 4.46%. Bitcoin cannot ignore the move in Bitcoin today. Was trading just above 50,000. Right now hanging in there at 49,940. Bitcoin surging today by 3.7%. We've got gold down $5.50 the ounce to 2018. Drop there of 0.3%. And West Texas Intermediate crude flat on the day, 76.81 a barrel on WTI. Among the names reporting today after the close of trading, Arista Networks, Cadence Design, and Lattice Semiconductors. So again, recapping, stocks are higher. S&P up 19, up by about 0.4%. I'm Charlie Pellet. Balance of Power continues, and once again, here they are, Kaylee and Joe.
Thank you very much, Charlie, as always, for joining us on Bloomberg Television and Radio. And of course, Joe, it's been a week over the last week in which we have been very focused on domestic politics, but specifically the Senate's efforts over the course of the last weekend, even through the first half of the Super Bowl, to try to pass an aid package that's going to have funding not just for Ukraine, but also for Israel at a time where we're seeing things getting perhaps a little bit more contentious between Israel and the Biden administration with their handling of the ongoing war with Hamas in Gaza.
We heard from Benjamin Netanyahu on Sunday morning, which was illuminating now as the IDF turns to the south. And they go to Rafah. Remember, we talk a lot about the Rafah gates. That's right on the border with Egypt. It's a critical area, and that's where a lot of civilians had evacuated to.
Right, and where they're trying to get aid through.
Absolutely right, because the bombing was happening in the north. So this is creating a potentially deadly situation. I guess dozens of civilians are said to have been killed already, but I haven't seen a hard number on that from the government. I mentioned Benjamin Netanyahu. He was on ABC News, ABC this week with George Stephanopoulos talking about the action in Rafah and the urging from the Biden administration, the urging for restraint. Here's what he said.
Well, Rafah is a very small percentage of Gaza, and I think it's about 10% or 15%.
I mean, the estimates...
Enough area north of Gaza that has already been cleared.
Well, there's an estimated 1.4 million people in that area right now. And as the German foreign minister said, they can't just disappear. Where are they supposed to go?
No, well, the areas that we've cleared north of Rafah are plenty of areas there, but we're working out a detailed plan to do so.
This is where we begin our conversation with Hagar Shamali, founder of Greenwich Media Strategies and a voice of experience in the White House as former director for Syria and Lebanon at the National Security Council. Hagar, it's great to see you. I wonder how concerned you are now about this new direction that the IDF is taking to the south. Is it possible for them to protect civilians or create new humanitarian corridors at the same time?
It's difficult because they have a very short amount of time. And what they want to do in Rafah, the reason they're going to Rafah at all is because they weren't able to complete the operation that they foresaw in Khan Yunis. Khan Yunis is a Hamas stronghold in the south of Gaza. It was believed that that was likely where Hamas leaders were hiding, and they didn't find them, particularly Yahya Sinwar, who's one of the top Hamas commanders and who's believed to really be the mastermind behind October 7. And so that's why they want to move on to Rafah. But the problem is they have, as you've reported before, 1.4 million. I've seen numbers up to 1.5 million. That is a significant number of Gazans when you're talking about the total population of Gaza being 2.2 million individuals. So that means that the vast majority went into Rafah, squeezed down there. As it is, situation there is very dire. They are in conditions that are really not clean, not sanitary, not safe, really not healthy for children and families. And when you're talking about pursuing an operation, and they need to pursue those operations quickly, they've already started, as we've seen today. You don't have time really to move. It's a nice talking point to say, don't worry, we're going to move everybody north, or we're going to move them to designated areas. The designated area that I saw in Israeli press reporting was the size of Ben Gurion Airport. But there's no way that 1.4 million people can move easily to that area and fit in that area and be taken care of in a dignified way. And so I'm very concerned that this is going to cause chaos. And the U.S. government has said that. Both President Biden, the U.S. UN ambassador have come out very clearly on this.
Yeah, you're absolutely right. It seems Biden has sharpened in many ways his language around Israel and what it should do in recent days. And yet it doesn't necessarily seem that Bibi Netanyahu is hearing that message. We heard from him on the Sunday shows over the weekend. He also said those who say that under no circumstances should we enter Rafah are basically saying, lose the war, keep Hamas there. Is that effectively what the administration is telling Israel?
No, what and I see when I heard that, and I thought that was not fair to say publicly, because the Israeli government knows exactly what the U.S. government is saying. And what the U.S. is trying to say is, listen, you have to prioritize your threats. And is this threat worth going after? And that's how, by the way, that's how the U.S. pursues war. Is the threat worth going after, given the collateral damage you expect to happen, given how many number of civilians you know will die, or given what it will be like for these civilians who've moved there to uproot yet again, and to go where exactly? I heard the Israeli government, I heard Bibi Netanyahu come out, and he said today, I believe, that he agreed with the Americans, but again, he agreed on it's very much a public talking point. He said he agreed on the protection of civilians, and therefore they would continue going to Rafah, but that they assured everyone they would set up something very solid and stable for those civilians there. But there is a reality to this, and that is that it's 1.5 million people. It's no joke. And they've already gone into Rafah. And so the U.S., what they're trying to say is, is this threat really worth it? And I'll give you an example of that. When we had our war against ISIS and we defeated ISIS, that nobody can question that. ISIS fighters still exist. We know that. It doesn't necessarily mean you have to go after every single cell, after every single fighter or battalion to defeat, to actually have a tactical victory. And you have to weigh the pros and cons and the benefits of each operation. And that's what the U.S. is saying, is that this one, as to quote President Biden, was over the top. That's exactly what he said, and that's what he meant.
Hagar, 2 Israeli men who were held hostage for, well, months at this point, going back to October 7th, were rescued last night. That headline seems to have been obscured by the rest of what we're talking about. I wonder what that tells you about the potential for other special forces raids like this to get other hostages out if there is no ceasefire.
I'm glad you mentioned how that news has been drowned out, because there are a lot of headlines will have been focusing. They'll say there was this operation where dozens were killed, and a lot of the headlines are missing that there were 2 hostages released in this raid in an apartment where they were found, which is just fantastic news. It's great news that they found them and that they released them, and it boosts morale and hope for a lot of these families, of course, and for the military to pursue similar operations. The fact is, it will be hard to release the remaining, and there are about 130, estimated to be about 130. And we saw news last week saying that about 50 have likely died, and that's coming from the Israeli government. It will be very difficult, unfortunately, to release the remaining in raids. If you just look at the history, they were only able to actively release 1 hostage before this. And the other hostages have gone through the hostage prisoner swap. And now to that point, those talks continue. Even though you saw headlines last week saying that Netanyahu rejected Hamas's latest counteroffer, that's typically how these negotiations go. Israel had an offer.
So you still have, Hagar,
and so on.
hope that a deal like that can be made despite Israel's pushback?
Yes, I do have hope for a few reasons. First, because the talks we do know continue. In fact, Hamas sent a delegation to Cairo to continue to follow up on their counter proposal. So that's one. And their counter offer did not include a demand for a permanent ceasefire. It would include a permanent ceasefire, a demand for a permanent ceasefire to release all the hostages. But anyway, I digress. So that's one reason. Talks continue. The second is that the Hamas and the Israeli government face a lot of pressure on both sides domestically, on the Israeli side to prioritize the release of hostages, and on the Hamas side to end this war altogether. And most Gazans have said, well, at least those that we've seen, who have been in the streets saying, just release the captives. They tie the two together, and that is a correct assertion, to tie the two together. So they're both facing this ongoing pressure, and you've seen them in the past agree to the principle of a ceasefire and hostage prisoner swap. So there's no reason it can't happen again. But you have to understand that from the Israeli government side, they do believe, and a lot of U.S. generals agree with this, that this continued aggression and what you're seeing from the Israeli side, this brutal campaign, that it also further increases the pressure on Hamas to move toward a deal. And so that's also why you see that strategy from the Israeli government side.
Hagar, it's great to see you. She's the founder of Greenwich Media Strategies. Hagar Shamali, we appreciate your expertise always when you join us here on Bloomberg. Nick Wadhams is with us now as we add the voice of our national security team leader. He's with us at the table. And it's good to see you, Nick. Thanks for joining. Did you see Donald Trump in South Carolina over the weekend?
I did. I'll leave it at that. Yes.
I'm gonna let our listeners and viewers have a taste, and we'll have you respond. This is the comment on NATO, of course, and whether our allies are paying their fair share or something like that. Here's Donald Trump from South Carolina.
I said, you got to pay up. They asked me that question. One of the presidents of a big country stood up and said, well, sir, if we don't pay and we're attacked by Russia, will you protect us? I said, you didn't pay? You're delinquent? He said, yes, let's say that happened. No, I would not protect you. In fact, I would encourage them to do whatever the hell they want.
Encourage.
Yes.
Not just allow.
No.
Actively encourage, Nick, is something else entirely. What has the response been in the national security community here in Washington to this?
The response has been, as you would predict, some exasperation, horror. I mean, Listen, though, there are a couple of things about this that we have to take into account. One is this actually true? Did this conversation actually happen? Which is not 100% clear. We know that Donald Trump for a long time has been extremely skeptical of NATO.
Yeah.
There was a big NATO meeting in 2018 where he made a lot of threats and really threatened to blow things up, but then came around. But certainly we'd never heard anything like this before, but we are still in the process of trying to figure out whether this is an anecdote where he maybe went a little bit too far to whip up the crowd, or
he would never do that.
There were a lot of things we thought would never happen that did end up happening. So we're still trying to sort this out. It feels a little bit more of a campaign thing than something that Donald Trump would actually encourage Russia to do. But there's a lot of concern around his what he's saying around Russia and Ukraine, and this certainly feeds into that bigger narrative.
Yeah.
Jens Stoltenberg is acting like he said it. But, maybe that's not the point. The language and the coverage I find interesting sent shudders across European capitals, tremors across Washington. This is Donald Trump. What did people think they were?
Right. I mean, that's the other thing. And I think you will find that, yes, there is anger, unease, exasperation in European capitals, but they have known for some time that he is the front runner among Republicans. They know exactly what he thinks about NATO. They also know that if he wins, he would not be there for more than 4 years, which is an interesting angle because it makes you think, well, could he, could he, well, that's a whole other question. You can get into that. We can get into that tomorrow. But would he, 4 years is something that they could potentially endure. If they're not looking at 8 years of Donald Trump and this kind of thing, it's like, well, if we put our heads down for 4 years, and let's not forget that he was a real ally in a lot of ways to places like Poland. U.S. troop presence in Europe actually increased in some places during his presidency, so it's a mixed track record.
Finally, Nick, just in our last 90 seconds with you, we also got some news over the weekend that the Defense Secretary, Lloyd Austin, is in the hospital again. He actually announced it this time, but he's in critical care now for a bladder condition. Do we have any idea how long he may be out of the mix as we deal with all of these geopolitical conflicts around the world? Because Kathleen Hicks is in charge right now, right?
Right. He transferred authorities. We do not have any sense. The real question we're trying to figure out here is obviously when the first go around when he was hospitalized for 2 weeks, he did not disclose it. He did not. He was very opaque, wanted to guard his privacy jealously. It created a huge amount of concern. This time around, we're still trying to figure out how serious is it? Is this something that could be a bigger health issue that would really affect his ability to do the job? Or are they just being very careful and making sure that, everybody, full transparency and stuff like that? We're trying to sort it out. But certainly, if he's going back to the hospital, that suggests that the health issues he had in January have not been resolved, and that's going to present a great many questions.
We hear a lot about chain of command. I'm sure the Pentagon at its briefings will be emphasizing that point.
That's right, today at 2:30.
2:30.
We'll have
with some
Pentagon
fun questions
briefing,
for Pat Ryder, I
exactly.
suspect. Because the timing here is everything, Kaylee, which is, I'm sure, why you asked it. Considering the fact that we're involved in repeated airstrikes now against foreign entities, never mind what's happening in Israel and Ukraine. This is a real story.
Absolutely. And of course, we're seeing perhaps the secretary learned his lesson from last time about making sure we all know that story as it's happening versus learning the details later.
Nick Wadhams will get a day off someday. He runs our national security operation here in the Bloomberg Bureau. We always know he's here, which is why he joins us here on Balance of Power. We thank you, Nick, as always. I'm Joe Matthew alongside Kaylee Lyons. This is Bloomberg.
Bloomberg World Headquarters, I'm Charlie Pellet. 1:21 the time now on Wall Street. We've got the Dow, the S&P, NASDAQ all advancing. Bitcoin with a 50,000 print last hour. Right now, Bitcoin 49,892. Bitcoin up now by 3.6%. Stocks pushing higher. S&P close to session highs right now, up 19 at 5,045. That is a gain of 0.4%. Dow Industrials at 38,914. The Dow up 0.6%. NASDAQ up 58, a gain of 0.4%. 10-year yield 4.16%. The 2-year 4.46%. Gold right now down $4.50 the ounce to 2019. That is a drop of 0.2%. West Texas Intermediate crude unchanged on the day right now at $76.83 a barrel. Diamondback Energy is buying fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator focused on the prolific Permian Basin. Diamond, which uses the ticker FANG, FANG, up now by 9.7%. Endeavor is not publicly traded. Again, recapping, we have got the Dow, the S&P, and NASDAQ all moving higher. S&P right now up by about 18 points, up 0.4%. I'm Charlie Pellet. Kaylee and Joe, that is a Bloomberg Business Flash.
All right, that is me. You know, sometimes I point at Kaylee and then she points back at me. Charlie, thank you, and thanks for being with us on the fastest show in politics.
Charlie points at both of us, so it gets confusing.
It's very confusing
it's
indeed.
One point for each.
This is what I read about this morning. I was told we would all be less productive if we were, in fact, the chosen few to come to work this day after the Super Bowl. I'm starting to believe them, Kaylee.
Yeah.
Silence doesn't work great in this business. So, a working Super Bowl Sunday for the Senate. This, according to Bill Hoagland at the Bipartisan Policy Center, has never happened before. Now, let's be clear. They weren't in there, voting during the halftime show. They got out at 2:30 or something like that. But the fact that Chuck Schumer got everybody in the building and they advanced a bill is a pretty big deal around here.
Yeah, considering
Where it doesn't take a lot.
actual progress is hard to come by, actually getting the votes to get something, even if it's just procedural, over the finish line. But we know that this is the United States Senate we're talking about. If you want things to move fast, you need all 100 senators to be on board. Senator Rand Paul, Kentucky, is not on board, so things are moving a bit slower. It looks like Wednesday could be actually ultimately the final vote on this package that would provide $60 billion in aid to Ukraine and billions more for Israel and Taiwan.
That's right. It's going to be interesting to see where it goes from there.
Yeah.
Encouraging numbers in the procedural votes that we've seen, but the House is just a different animal, and we could be in a world where it passes the Senate and goes nowhere from there.
Yeah, if it even gets a vote in the House at all is very much a question, because Mike Johnson may very well face a threat to his relatively young speakership if he does so. So on that note, let's bring in our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us, as they always are on a Monday, even the Monday after the Super Bowl. And Rick, of course, it wasn't just the Super Bowl that was happening over the weekend. We also heard from Donald Trump in South Carolina suggesting that he has told European leaders that he's actually said Russia can do whatever the hell it wants, invade NATO allies that are not paying their fair share. And I wonder if those kind of remarks and the kind of isolationist bent that the former president continues to be very vocal about actually would give some Republicans, like in the House, cover to not vote to advance aid for Ukraine.
Actually, I think it would have the reverse effect. I think that he's opening up a level of space within the Republican Party to say, you know what, we don't have to be for a Russian invasion into NATO, but we can certainly help Ukraine. And Mike Turner just got back from Ukraine last week and had a lot of really important things to say to his Republican colleagues in the House about the need to act at this time to support Ukraine. And so I think that it actually could have a backlash effect. I think it makes it easier for the hawks in the House, probably 100 Republican members, to actually push for passage now, just so they're not associated with the Trump comments.
So that would suggest a coalition could come together, Jeannie, in the House, Democrats and Republicans. It would probably take every Democrat to maybe work around the speaker on this, assuming Mike Johnson makes good on his vows to not bring this to the floor. There's a lot of happy talk about a discharge petition. It's a wonky thing here that would allow a smaller group of lawmakers to kind of jam this onto the floor for a vote. I just wonder if it does reach the floor, regardless of the path it takes to get there, can it pass the House?
It can. You know, the challenge, I think, is going to be for Mike Johnson's speakership, as you were just talking about. You know, we've heard from members such as Marjorie Taylor Greene, who have said that they will push for a motion to vacate. And of course, that puts him in an enormously challenging position that his recent predecessors have been in. You know, this is somebody in Mike Johnson who has been supportive of Ukraine aid. He is part of the Gang of Eight. He knows the national security threats if we don't pass this, and they are incredibly real. And so what does he do now that just a few hours ago, as you were talking about, Donald Trump is out there saying that, you know, we shouldn't, you know, inviting Russia, essentially Putin, to go into NATO countries, who has been on the phone calling members saying, don't fund Ukraine. It puts him in a really difficult position. And I have to say, I was heartened by Tom Tillis's comment when he said, our base cannot possibly know what is at stake here. And that, to me, is the crux of this. We have got to, the leaders in Congress have got to do a better job in explaining to the base why this is so necessary. Leadership matters. And so that's what Mike Johnson is going to have to show, that he has what it takes to be a leader in this moment, because he knows the right thing to do here.
Well, Jeannie, obviously we've all been focused on the Ukraine aid part of this supplemental package and whether or not enough Republicans can get in line on that. But as I mentioned, this also includes billions of dollars in aid for Israel, and especially what we're seeing taking place now in Rafah, where there are over 1 million innocent Palestinian civilians gathered that potentially could now be in harm's way. Is there going to be a problem getting enough Democratic votes to get this package over the line because it provides support for Israel's cause?
You know, I don't think so. I think in the end, you're absolutely right. There is a lot of consternation in certain parts of the party, rightly so, about what is happening in the Middle East. But by and large, they do have the numbers on the Democratic side to support the package to Israel and put the proper conditions on it so that it is going to be spent in a way and used in a way that does not violate our views as it pertains to human rights. But, you know, that said, this is an issue. I'm in New York. This is an issue playing big in several of these special elections that are going forward. You know, the special election in Long Island in particular, and also as we move towards the primary election between Jamal Bowman and his contender. Israel is playing very big in New York in terms of this split in the Democratic Party.
Well, in the midst of all this happening, and we can add a budget that is not coming together with a government shutdown set to begin the beginning of March, there's going to be an impeachment vote, it looks like, tomorrow evening. The first one failed. This one's expected to pass. This is the impeachment of the Homeland Security Secretary, Alejandro Mayorkas, who showed up on Sunday morning television to tell the world that he is undeterred. He spoke just a few hours ago. Here he is now.
Baseless allegations, Kristen, and that's why I really am not distracted by them and focused on the work of the Department of Homeland Security. I'm inspired every single day by the remarkable work that 260,000 men and women in our department perform on behalf of the American public. I've got a busy day today after the show, a busy day of work. I've got a busy day Monday, Tuesday, Wednesday, and so on.
Rick, he may have a busy day Tuesday, but it looks like that vote's going to happen regardless of his schedule. Do you think it'll pass this time? Will the secretary be impeached?
You know, even if he is, it's much ado about nothing. I know it sets a horrible precedent that you're now impeaching people because you disagree with policy, not because they did anything illegal. And that is the weight of this vote. If it passes by one vote. That was missing Stephen Scalise. Because he was getting treatment for his cancer the last time they took a vote. But it actually doesn't affect his day job. He continues to serve as the secretary. And the reality is it would be highly unlikely that the Senate would even take it up. So it's dead on arrival is a term we use a lot. This one is dead before arrival.
Well, Rick, what was interesting over the weekend is one of the 3 Republicans who did not vote to impeach Mayorkas in the first attempt is Mike Gallagher, the Republican who chairs the House Select Committee on China. And he announced he is not running for re-election. Another Republican committee chair has decided they don't want to stick it out in this House of Representatives any longer. What does that say to you?
Yeah, Mike Gallagher, really one of the youngest committee chairs ever, heads up the special committee on China. Incredibly important to the House of Representatives. Probably no one issue brings Republicans together with Democrats than issues around China. And he's had it. He's basically looked inside the dysfunction that has been the House of Representatives for the last year and decided he's got better things he can do with his time. This is a very bad thing that's happening on Capitol Hill, where very thoughtful people, Mitt Romney, Mike Gallagher, others, have made a decision that they can do better with their time outside of government service. And government service has always been the highest calling that anybody could pursue. And it isn't if nothing is done. And this Congress is driving good people out. Mike Gallagher could, decide that he wants to vote for impeachment, which he did last time, or just take a walk on it. There are a lot of different options. But again, none of it's really going to matter in the long run.
I'm really glad you brought that up, Kaylee. That one blew me away this morning.
Yeah.
This is not an old man. This is actually a very young man with a great story to tell. And I guess now we know why he voted the way he did for impeachment. I guess against impeachment is what I should say. But during that impeachment vote, Select China Committee and a really important member of this conference, we'll see where he goes. He's got a long career in front of him.
Yeah, again, he's less than 40 years old. And it's a question of where someone like that goes next. We know Rick and Jeannie will be going to the late hour of Balance of Power next.
Yeah, we'll talk this out a little bit
Always
later.
thank them for joining us at this hour as well. Our Bloomberg Politics contributors, Rick Davis and Jeannie Shanzano.
Let's get you up to date on world and national news. Now, for that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Former President Trump is coming under fire after saying at a campaign rally over the weekend that if reelected, he would not protect NATO allies unless they pay their share in defense funds, even suggesting he'd urge Russia to attack them. The European Union's top diplomat, Joseph Borrell, reacted to Trump's comments today.
Let's be serious. Let's be serious. NATO cannot be an alliance a la carte. It exists or it not exist.
Borrell spoke ahead of a meeting of EU development ministers in Brussels. 2 Israeli hostages have been freed after an Israeli rescue operation in Rafah. 60-year-old Fernando Simon Marman and 70-year-old Louis Har were rescued from the second floor of a residential building. Marman's niece, Geffen Segal, spoke at the Sheba Medical Center in central Israel, where the men are being treated.
It was very emotional to see them, to hug them, to feel them. It feels almost unreal.
The Israeli military says of the 135 captives still believed in Gaza, 31 they say are likely dead. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The S&P now trading a little change. Tech stocks, though, moving lower. Both NASDAQ and the NASDAQ 100 index in the red right now. Amazon and NVIDIA, which have been higher for most of the day, now trading in the red as well. Right now, we've got NVIDIA down 0.3%. Amazon down 0.9%. S&P, though, holding on to a 5-point gain at 5,032, up 0.1%. Dow Industrials up 195, up 0.5. NASDAQ down 10, a drop there of 0.1%. 10-year 4.16%, with a 2-year that's yielding 4.45%. Gold down $3.50 the ounce to 2020, a drop of 0.2%, while West Texas Intermediate crude little change, down 4 cents now, 76.80 a barrel, down less than 0.1%. Gilead Sciences is buying Sema Bay Therapeutics, a developer of an experimental liver disease drug, for $4.3 billion in equity value. Shares of Gilead up 0.9%. Sema Bay Therapeutics up now by 24.9%. Recapping, S&P little changed. NASDAQ turns lower. NASDAQ down 0.1%. S&P up by 0.1%. I'm Charlie Pellet in New York. Back we go to Washington. Balance of Power continues. Once again, here they are, Joe and Kaylee.
Charlie Pellet, thank you very much, with a look at where we're trading about 4 hours into the market day. And of course, Joe, it was before the markets actually opened for trading today that Bloomberg Surveillance had a wide-ranging conversation with Republican presidential candidate and former UN ambassador Nikki Haley. A lot of ground was covered with her, including the issue of entitlements, which you have spoken with her about in the past, and has made the round in many campaign advertisements. But
once,
also
that's all it takes.
a lot of geopolitics as well, given not just the questions around what's happening in the Middle East, in which she has been very vocal about, but specifically in regard to Donald Trump's comments about NATO over the weekend, and whether or not he would encourage Russia to attack NATO allies, and also what we've heard from the former president on China as well.
This is a huge opening for her as his former UN ambassador, to try to draw a contrast when it comes to geopolitics. She's not always interested in doing that, however. And, we talked about this idea of a 60% tariff that he floated last week. Unclear if he even had thought that through before he was on TV talking about it.
Well, he told Maria Bartiromo it could be more than 60%. But when you think about what higher tariffs actually mean here at home in the U.S., that is what Nikki Haley said the focus should be on. Just take a listen to what she told us on Bloomberg TV and radio earlier today.
All that does is raise taxes on the American families and our small businesses that we need to be taken care of. It is ludicrous that he wants to go and raise those tariffs to everything that we import. That's going to affect American families on anything from baby strollers to appliances. Every American family will see at least a $2,800 increase in their taxes.
Which brings us to the headline on the big take today. Just like that on cue. In Trump-Biden 2024 rematch, the only sure loser is China. Almost as if Trump had written it himself. Jenny Welch is with us to talk about it. It's great to see you, Jennifer, Bloomberg Economics chief geoeconomics analyst. You are, of course, advising our national security team on stories like these. And I wonder what you think 60%, because I know you worked this out. You actually crunched the numbers here. What would 60% mean for our trade relationship?
Well, thanks so much for having me on. So 60% tariffs on Chinese goods, according to our model, on top of the existing Trump-era tariffs from his 2018 trade war, would take U.S. imports of Chinese goods down to about 0%, very quickly plummeting in trade. And what that means, especially for sectors like textiles, electronics, and metals and other major imports that we get from China, is that there's going to be a major gap there. Now, some other economies like the EU, Southeast Asia, Mexico might be able to fill some of that, but there's a real question of how much of it could be produced indigenously in the United States, how much of it would just be a gap left that companies didn't have to scramble to fill.
Yeah, I mean, we all learned the lesson in COVID, right? When production shuts down in China, it creates supply issues pretty much automatically, because yes, there are efforts to friendshore or put more production into places like India or Vietnam, for example, you can only ramp up that capacity so quickly. But you make a good point about how there already are existing tariffs in place. The Biden administration has not removed those. Those weren't just Trump era, they are now Biden era too. Biden hasn't necessarily been any easier on China than Trump, even if he's not out there floating a 60% level.
That's true. And even some of our Bloomberg News colleagues are reporting Biden might be considering raising tariffs on some key goods, EVs, clean energy products, maybe even older generation semiconductors, what we call legacy chips, to guard against the perceived not only national security concerns that those might present, but also the economic concerns of dumping those into the U.S. market. So certainly I think if you're Beijing and you're looking at the 2024 election, there's not a lot of upside to either of these options. Both presidents have been extremely tough on China in slightly different ways and slightly different tones, but the pressures remain very high.
So does Beijing care then? Or is it 6 of one, half dozen the other?
I think Beijing is definitely watching this election closely. I think they're certainly concerned about the outcome of it. I think there's probably pros and cons to either option from their perspective, right? I think on one hand, they see the former president as being very tough on them when their economy is already in a rough situation. But on the other hand, they think that maybe he has a tendency to cause friction with other U.S. partners, whereas that's something that President Biden has been very successful in bringing U.S. partners closer into the alliance network in ways that China sees as concerning to its interests.
Well, I'm glad you brought up China's own internal weaknesses that it's also contending with here. When we talk about what a 60% tariff means, sure, it may raise the cost of goods for American consumers who are trying to import, have access to what used to be cheaper material. But for China, what happens to the second largest economy in the world if trade with the U.S. were to be effectively cut off when it's already struggling with the property sector and in so many different areas?
Oh, absolutely. I mean, for one, the U.S. has a trade deficit with China. So losing access to Chinese imports can certainly raise costs for U.S. consumers and manufacturers, but for those Chinese exporters, that's a direct hit to their bottom line on top of the existing tariffs. Then you add on top of that the existing economic pessimism and gloom that's really holding things like the stock market down, that's doubling up with concerns about the property sector at a time of transition for China's economy, and it just looks like a gloomier picture for them. So I think it's certainly a huge concern if the former president were to be reelected and were to follow through on that promise.
So it begs the question, who needs the other more, right, in this trade relationship? What other options would China have if it lost the U.S. as a trade partner?
Well, I think one of the options that they have, and it's something that would be sort of a second order consideration from a U.S. trade policy perspective, is would they just start transshipping those export or imports through different countries so that they're still making it into the U.S. market, but they just are coming off as, say, made in Mexico, for example. The other option that they have is to actually move production overseas. So we've seen that shift happening where Chinese companies are moving to Southeast Asia, making goods there, and then those are coming to the U.S. It looks from the trade data like that those goods are coming from Southeast Asia, but the reality is they might still be made by China.
Wow.
It's absolutely fascinating to think about the way goods move through the world and how we're starting to see those patterns change in the aftermath of COVID because of the very same things I was talking about earlier, the fact that in many ways China was shut down for a much longer period of time. All of these things, though, take time and investment. All the while, you can see these transitions in power. And to your point about how both President Biden and former President Trump are similar on China, it's worth noting you can't agree on a lot here in Washington, and yet everyone in Congress is pretty hawkish on China as well. How much do we have to consider the legislative side in this, too?
No, I think that's absolutely going to be a point of continuity across parties, especially given disagreements about Russia, Ukraine, especially given disagreements about the Middle East and Israel. Probably the one area in which Republicans and Democrats can agree on is to be tough on China, and that might be the one area in which they're able to make progress on legislation going forward. So I certainly expect that to be maybe the one of the few things that moves on the Hill.
Joe Biden's on TikTok now.
Yeah.
I don't know if that changes things. I'm assuming it does not, Jenny, but I find that interesting, and whether that's seen as a double standard. He signed an executive order barring federal employees from using TikTok. His campaign just signed on with a big smile.
Yes, yeah, that was an interesting development, I assume, to get after the younger demographics that are using TikTok more. But the interesting thing is former President Trump tried to ban TikTok with one of his executive orders. It ended up getting held up in court, so it hadn't gone anywhere yet. But this is still a debate in the United States about potential national security implications of TikTok and the data it's collecting.
There was no TikTok ad on the Super Bowl last night,
I noticed
right? No
that.
ByteDance?
No, very
Even though
interesting.
we saw them on the Republican presidential debates.
Yeah.
Maybe they couldn't afford it.
They were
Pretty sure that's
expensive
not
ad
true.
buys.
Pretty sure that's not. Jennifer Welch, great to see you. Great reporting on the Big Take, Kaylee. This is a great piece of journalism right here.
Absolutely. You can find it on the terminal and online. And just as if he's hearing us, NSC spokesman John Kirby says national security concerns about TikTok are data related. And yes, it is not approved for use on government devices.
They're always listening.
Hope you're listening to us. This is Bloomberg.
Listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
So he's joking again about his age. Kaylee, I'm referring to Joe Biden. I
Yes.
thought Rick Davis made a fascinating point at the end of last week when the whole special counsel age issue bubbled up. He said he has to keep joking about it. You don't want to seem like an angry old man, seem like a happy, funny one.
And maybe that's what he was trying to do
Yeah.
when he was here in Washington at the Washington Hilton addressing the legislative counties.
Yes,
conference?
that's correct. Very good.
And, you know, I tuned into the speech just
Everyone
given
gets a
how
speech.
every time he gives a speech, we pay attention now just to see how everything goes for him. And he decided he was going to make light of this age issue. Just take a listen to the words of the president earlier.
We're promoting clean energy and industries of the future, made here in America, made in America. What I didn't realize, and I've been around, I know I don't look like it, but I've been around a while. I do remember that.
See, if he just dropped one of those every day.
Yeah. But would it change minds? Because also at the same time that the president's saying, yeah, I've been around a while, I do remember these things, you have data that suggests that really this is problematic for him as much as he would like to make light of it. Ipsos and ABC released a poll yesterday.
Yeah, we got a new one.
86% of Americans think Biden is too old to serve another term as president. Wow. That figure includes 59% of Americans who think both he and former President Donald Trump are too old. Remember, Trump's 77 to Biden's 81.
4 years his junior. Wow, 89, is that what you said?
86.
I mean, 86%, that's an overwhelming number. I don't know, but I mean, look, maybe Dark Brandon can get him out of this. Maybe the humor can get him out of it. Remember, he was at this event when a ladder fell and he said, that wasn't me, and the place split up laughing. Right. They like that kind of stuff. It works in politics, and they like Dark Brandon. That was something that was an insult. They turned into a benefit here.
With laser eyes.
This might take a little bit of background. I might need your help on this because there was a conspiracy surrounding this Super Bowl, specifically involving Taylor Swift, who was said to be a psyop.
Yes.
What was the op?
Essentially, the operation was that she started dating Travis Kelce, star tight end for the Kansas City Chiefs, that Kelce and the Chiefs team was going to win the Super Bowl, and that once that happened, she was going to use that as a moment to come out and endorse
And her dating
President
him alone
Biden.
would help them win the Super Bowl.
Yes.
Okay, I'm just following the...
Theoretically.
Yeah, the logic.
The powers of Taylor Swift are really what's in question
Vast.
here. So Dark Brandon came out yesterday. Really, President Biden came out, posted on X after the Chiefs won, with the laser eyes included, to say, just like we drew it up. So leaning into that whole conspiracy notion. And of course, this hasn't gone unnoticed by former President Donald Trump.
Did you see his post?
I did indeed.
Not all caps, by the way, but this is just, it was amazing. This came after the game, after the Biden thing. This is on Truth, not on Twitter, or X. I signed and was responsible for the Music Modernization Act for Taylor Swift and all other musical artists. Joe Biden didn't do anything for Taylor and never will, he writes. There's no way she could endorse crooked Joe Biden, the worst and most corrupt president in the history of our country, and be disloyal to the man who made her so much money. He says, finally, besides that, I like her boyfriend, Travis, even though he may be a liberal and probably can't stand me, exclamation point.
Yeah, keeping in mind here that Travis Kelce has gotten some blowback for appearing in Pfizer commercials to advertise the COVID-19 vaccine. So, there's just a lot of things at work here. But he likes the guy.
There was a big Pfizer ad in the game, too, last night. Big Pfizer ad. Very feel-good Pfizer ad. I just love this, though. It's sort of first draft. Let's just kick that out at 1 o'clock in the morning. Even though he may be a liberal and probably can't stand me. There we go. Send. Hit send. A remarkable evening in American and political culture.
Yes. Also, great game, by the way. It's worth noting that. It was a little slow at the start, to be honest. I was like, okay.
Well, the whole first half was kind of, right?
But talk about an ending.
But to think that we get into, almost happened, we almost had double overtime.
Yep.
Producer James was filling me in on this. Do we have ratings is the question? Because these must be...
I don't know. I haven't seen it.
Boffo ratings.
I'm sure.
Taylor, overtime, everything collides.
And Usher. Usher was also fantastic.
So you were big on the halftime
show
as
I'm
well.
a millennial.
You were
that
good
was
with all
like
of it.
All my jams.
Roller skates.
Yes, very cool.
Not roller blades, old-fashioned roller skates.
And when
from when I
Lil
was a
Jon
kid.
and Ludacris show up, and Alicia Keys, I mean, Carol Masser must have loved it. Where's Carol? I'm surprised she hasn't chimed in yet.
Wait, the Super Bowl wasn't rigged so that Taylor Swift could have a bigger platform to endorse Joe Biden?
No one ever said that.
That's not true?
No one ever said that, Carol. As far as we know, that is still the case. Dark Brandon said so himself.
All right. Man, I feel like I'm watching a streaming series or something. I don't know whether it's House of Cards or it's just kind of crazy, this stuff, when there's really some serious stuff going on in the world. It's just kind of, it's a little nutty. But I love the game, have to say, and kind of love that Kansas City won. Just going to put it out there. Tim?
Am I going to have to join?
House of Cards.
Guys, am I going to have to join Truth Social now? You're talking about...
No.
You know, it's funny. I've been asking that, Tim, for however long it's been. I have others do it for me, and they send, I haven't brought myself to logging.
Can you
in yet.
have
If you do,
your
please
people,
let me know.
your people send my people the posts? And then
Definitely. We'll add you to the list.
Kaylee, are you on
A lot of
Truth
screen
Social?
grabs flying around here.
Kaylee, you
No,
on?
I just monitor Donald Trump's True Social feed.
Okay.
And that's it. I don't have, you know who has a true social account though? The Biden campaign. In addition to every other social media platform, including guys TikTok now. They're
I
on
saw
TikTok.
that. Yeah.
Anything for the campaign, I guess.
I'm waiting for like the
Well,
yoga
they banned-
workout or dance workout by Joe Biden. Like, you know. on the
But he
campaign
banned
trail.
TikTok for all federal employees. So he's using like a personal phone for this?
Politics.
Yeah,
Come on,
so.
Joe. You know politics.
Yeah.
You got to reach the youths.
I think that's a double standard.
Nicely done, Kaylee.
That's right. That's right. The youths have a lot coming up, by the way, on Business Week. Kaylee, I'll meet you at 5 o'clock,
Yes, you will.
Washington time. The next edition of Balance of Power. You're in good hands with Carol and Tim. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser.
I love looking at different things that are going on in our economy. The Fed president's kind of battled it out about what's going to happen next.
And Tim Stenevec.
This story really struck a chord with me. The cost of education. Consumers are out there spending money. They have jobs, and they're continuing to spend money.
On Bloomberg Radio.
And a happy Monday, everybody. A very good afternoon. Live on Bloomberg Radio and television, on YouTube and Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser along with Tim Stenevec. Let's get to the setup at this hour on this Monday, February 12th. Up, and away. S&P 500. Well, it was hitting another record earlier today. We're off our best levels of the session, but we've got some new inflation data that we'll be talking about tomorrow. That data expected to underscore further inflation, but that's tomorrow. We're thinking a lot more about what's going on today.
Yeah, on our minds, the latest in a string of massive deals transforming the U.S. energy landscape. This, Carol, as companies push to line up future drilling sites and cut costs. Another major deal when it comes to energy.
I'm fascinated by what the increased consolidation, if you will.
The Permian Basin. It's like the belle of the ball.
Exactly. They're in Midland, Texas. But it's so interesting in a world where we keep saying we're pushing back on fossil fuels, and yet these big major energy companies continue to really kind of double down on them. Plus, we're going to get into, speaking of just talking about politics with Joe and Kaylee, how in a Donald Trump-Joe Biden 2024 rematch, the only sure loser is China. This is our Bloomberg Big Take today.
Also, why the 2024 maturity wall is a myth when it comes to private credit. One of the street's bond rating agencies will weigh in.
Yeah, and then this week we'll know whether the rest of the U.S. gig economy will benefit or whether the performance that we got last week from Uber, remember, strong numbers, we'll find out whether that was unique or whether it's across the gig economy.
Okay, Carol, I got a question for you. How would you feel about a Super Bowl holiday?
That's
so what that
ridiculous.
means is like the day off today.
Can I weigh in?
Well, yeah,
Ridiculous.
millions of Americans are taking the day off anyway because, they're calling in
They
sick.
made it their own little holiday.
Yeah.
All right, more to come in the next 60 minutes. First up, let's get a check on the day's top stories and a look at that trade. Hey, Charlie Pellet.
Well, hello there, and happy Monday to you both. We have got the Dow, the S&P, they're both higher. NASDAQ, the NASDAQ 100 index, both moving lower right now. We've got the S&P higher by 6, up by about 0.1%. Stocks climbing anew ahead of data that is expected to underscore further disinflation progress, paving the way for the Federal Reserve to start cutting rates this year. NASDAQ down now by 9, drop there of 0.1%. NASDAQ 100 index down 32, a decline there of just about 0.2%. 10-year 4.15% with a 2-year that's yielding 4.45%. Gold down 0.1%, 2021 the ounce, and West Texas Intermediate crude now down 0.2%, 76.68 for a barrel of WTI. Nvidia today overtook Amazon's market cap to become the 4th most valuable U.S. company. Those stocks now trading mixed. We have got Nvidia shares higher by about 0.1%, while Amazon down now by 1%. Again, recapping, stocks a little changed. S&P up 7, up 0.1%. Gold down 0.1%, 2021 the ounce. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, much appreciated. Well, we have, as Tim mentioned earlier, seen a string of massive deals transforming the U.S. energy landscape as companies continue to push to line up future drilling sites and cut costs.
Yeah, just today, shares of Diamondback Energy surging after announcing a $26 billion cash and stock deal to acquire fellow Texan oil and gas producer Endeavor Energy Resources to create the largest operator focused on the prolific Permian Basin. The deal, Carol, making energy stocks the top-performing major industry group in the S&P 500 today.
Yeah, definitely some outperformance. So let's get more on the deal, the industry outlook. With us is Bloomberg News U.S. oil reporter Mitchell Furman. He joins us on Zoom from Houston, Texas. In the heart of it all. Hi, Mitchell. Good to have you here with us. The Permian Basin, once again, being talked about a lot, it seems. Tell us about this deal and why it's considered a coup that Diamondback Energy, in particular, got Endeavor Energy.
Yeah, hey guys. Basically, like y'all were talking about, the key is oil executives are looking to pad their portfolios with an inventory of future drilling sites and to kind of shore up cash flows and, increase efficiencies. And that's what this is all about. Diamondback is known as, one of the top oil companies to be based in the Permian Basin, not based elsewhere and just working there. And they wanted to shore up that they had a long runway of future drilling sites. That's what investors are looking for. We heard Diamondback president today on the conference call say that their shareholders are not paying them for growth these days. They want return of capital.
Mitchell, talk to us about the assets of these two different companies and to what extent they're complementary and to what extent there's overlap.
Yeah, that's a big piece of this deal. If you look at the maps which the companies provided in their slide decks earlier, the maps line, the inventory lines up quite nicely. There have been rumors for years about ExxonMobil being interested in buying Endeavor because of some joint ventures that the companies have had, but the Exxon synergies were not the only overlap for Endeavor. There also, it looks to be that Diamondback and Endeavor's assets work really nicely together, and they talked about it on the call this morning. Diamondback said that there are at least 150 wells that have an opportunity to be extended, which could produce more without really investing too much capital. So the synergies are definitely a big piece of this.
All right, so that's why investors like it, right? Because you look at, first of all, the ticker. It's a great one, FANG, for Diamondback Energy, but it is top among the S&P 500 and NASDAQ 100 gainers in today's session. So investors definitely all in on it. I'm kind of blown away, Mitchell, by all of the deals that we've seen over the last 4 months. What is going on? I kind of try to keep getting my head around this. In a world where we say, yep, we still need fossil fuel, but hey, guys, we're really going towards the greener stuff. Why is this consolidation? Is it just to make it more efficient and save on some costs as that move continues?
Yeah, a lot of it's about the efficiencies and driving down costs. And, these companies either need to grow or kind of get out and sell, because the ways you can grow is by, buying up or leasing new land, but much of that is already leased up or tapped. And, your kind of other option here to grow future drilling sites is to buy someone. And so that's what we're seeing. We've seen the majors, Exxon buying Pioneer last year. That's a huge roster of future drilling sites for Exxon. And yeah, that's what Diamondback is doing and they're throttling down a little bit. They said that they're going to reduce a few drilling rigs and their growth will moderate a little bit.
And Mitchell, just remind everybody about the importance of the Permian Basin, that geography here in the U.S., and to what extent it contributes to U.S. energy production.
Yeah, it's the heart of U.S. oil production. It's also kind of what, when we saw the shale revolution in the 2010s, when U.S. oil production boomed and started kind of posing a threat to OPEC, that was all driven by the Permian Basin, and that's where Diamondback has been the largest Fortune 500 company to be headquartered in the Permian, and they're trying to set themselves up to be a long-term player, but based there. But there's no doubt the Permian is the growth engine of U.S. oil.
So I always wonder when deals like this happen, but as we said, that there's been kind of a bunch of them in the last 4 months. ExxonMobil buying Pioneer, Chevron buying Hess, Occidental buying Crown Rock. So there's been a ton of them. And then, of course, the deal today. Mitchell, anybody else that, as a result of this deal today between Diamondback and Endeavor, that maybe need to do something to kind of stay relevant in this growingly, that's not a word, in this increasingly consolidated industry?
Yeah, analysts have been looking at ConocoPhillips as one to watch on, kind of another consolidator, if you will. Their market cap has grown over the years. I mean, they're more valuable than BP now, and they're kind of the world's biggest exploration and production specific company is how they kind of brand themselves. And they made 2 huge deals in the Permian during the pandemic. They bought all of Shell's assets out there.
All right.
So Conoco might be one. Conoco might be one. And then, there's always, we'll see if the Europeans decide to get back involved.
No, that's a really good point. I was just going to pull up ConocoPhillips on the Bloomberg, and I'm taking a look. The share's up, little change today, but definitely something we'll keep on our radar. Mitchell, thank you so much. Mitchell Furman, he's U.S. oil reporter at Bloomberg News in the heart of it all on Zoom there in Houston. All right, Tim, so we're watching energy names today. We really continue also to keep an eye on November's presidential race, kind of kidding around with Joe and Kaylee earlier, and what it could mean for many things, including the U.S.'s already strained relationship with China. That's been going on for years now.
Yeah, today's Bloomberg Big Take is also one of the most read stories on the Bloomberg terminal. It's about how whoever wins in what is widely expected to be another rematch between President Joe Biden and former President Donald Trump, they're both, Carol, considered a big threat by some.
All right, so let's get more on this. Let's head to our Washington, D.C. Bureau and Bloomberg Economics Chief Economist, Tom Orlik. Tom, good to have you here. We talk a lot about the U.S.-China relationship with you, but let's remind everybody kind of how we got here. How did China, in some ways, become U.S. enemy one, it almost feels sometimes, and find support among both the Democrats and Republicans?
So I think there's a lot of factors at work, Carol, but perhaps prominent amongst them is the role of Donald Trump. In 2016, Trump really demonstrated that tough on China wasn't just a kind of a marginal vote winner. It could actually be an election-winning narrative. And so after Trump's 2016 win, of course, we had the trade war, sweeping tariffs the U.S. imposed on imports from China, tit-for-tat retaliation on the Chinese side. When Biden came in, well, some expected him to adopt a more moderate tone. In fact, in some ways, he's gone even further. The Trump tariffs are still in place. There are sweeping controls on China's access to leading-edge semiconductors. And of course, Biden has done more than Trump to team up with allies in Europe and Japan and elsewhere. So as we rush towards the 2024 election, which looks very likely to be a rematch between Biden and Trump, of course, China is high on the agenda, and Donald Trump has suggested he's considering 60% tariffs on any purchases from China's factories.
So talk a little bit about what that would mean, Tom. If former President Donald Trump actually won the election and was successful in pushing through 60% tariffs on China, what would that actually look like?
So we know a little bit about what it might look like because we have the experience of the 25% tariffs which Trump put in place. And we know that U.S. imports of those goods where the 25% tariffs added to the price, we know that U.S. imports are down a lot. In fact, down more than $160 billion based on our calculations. So 25% tariffs put a little bit of a hole in revenue for China's factories. What would 60% tariffs do? Well, we've actually plugged this number into a big model of the global economy. And what it's telling us is that 60% tariffs would, in effect, be enough to turn off all U.S.-China trade.
Who gets hurt in that? Both, no? Tom?
Sorry, Carol, I think I missed your question.
No, that's okay. Well, it was a short one.
Well, look, I think
my point is, you know, we talk about and have, I feel like for years, Tom, about like this pushback against globalization, and yet, you know, you look at trade numbers, there's still a lot of trade that goes on between the U.S. and China. So if indeed we get a second term of Donald Trump and a 60% tariff on all Chinese imports, both get hurt in the process, no?
Yeah, so it's bad news for China. it's bad news for the United States. And the bad news doesn't just stop with the lost export revenue, because with a trade relationship comes a lot of other things. In particular, the trade relationship is good also for sharing technology. Countries that trade with each other also learn from each other. And this is a particularly problematic piece of it from China's perspective, because remarkable though China's growth has been over the last 4 decades, China is still catching up to the global technology frontier. So if we have a Trump win in November, and if this campaign trail talk of 60% tariffs turns into reality, and of course those two are both pretty big ifs, but if that's the world we're in, China would be looking at a significant loss in export revenue, but also be concerned about a further loss in access to the leading edge technologies which they need to fuel their continued rise.
Tom, what would it mean for U.S. companies, though, that rely on China for so much? I mean, I think back to November when President Xi and President Biden met in San Francisco at the APEC summit. That ticket to have dinner or go to a dinner with President Xi was the hottest ticket in the country that night. And you had executives flying in from all over the country so they could be in the same room as President Xi. And these are companies that do a lot of business in China and do a lot of business from China.
I think that's a really great point, Tim, and it's an important reason why 60% tariffs might play well on the campaign trail, but might turn out to be pretty tough to implement in the White House. Recall that during Trump's first term, there was 25% tariffs on hundreds of billions of Chinese exports to the United States, but there was also carve-outs for some key sectors where the US had a lot at stake. There was carve-outs for electronics, for example, for obvious reasons. If you turn off exports of China's smartphones to the United States, that's bad news for China's electronics factories, but it's also really bad news for some big US companies which are designing the technology, owning the brands, designing the semiconductors that go into those smartphones. So the global trade system, global supply chains are very complicated, very interconnected. It's hard to identify a product with inputs from just one country, and that's what makes it so hard to adopt these tools of economic statecraft to target rivals.
It makes me wonder, too, that if we start to see, problems once again with supply chains, or as a result of not being able to tap into what China supplies the U.S. or U.S. companies, what it means ultimately for U.S. consumers, right? That they could, bottom line, Tom, be hit with higher prices in an environment where the Fed feels like they're just about got this right.
Yeah, I think that's completely right, Carol. I mean, the big question when tariffs are imposed is, well, who's going to pay the cost, right? And if you listen to Donald Trump and his team, the claim is, well, our tariffs in our first term were successful, and China had to pay, and that meant more money coming into the US Treasury. But a lot of economists looking at this issue say, you know what, this was a little bit of a cost for China's factories, but in fact, US firms and US consumers had to swallow some of the cost as well. And that's another reason why 60% tariffs might play very well as kind of red meat chatter on the campaign trail, but the reality of what would happen if they were actually implemented might give policymakers, maybe even Donald Trump, pause for thought.
Yeah, really good point, right? In terms of, it might sound good, but when put into reality, obviously the consequences, economic or otherwise, for both the U.S. and China could be pretty dramatic and maybe prevent people from being so harsh in the end. Hey, Tom, thank you as always. Tom Orlik, he's chief economist at Bloomberg Economics in our D.C. bureau. Check out the Bloomberg Big Take. You can find it on the Bloomberg and at Bloomberg.com. You are listening and watching Bloomberg Business Week.
It's 2:21 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. S&P 500 index now in the red, down 4. A little change, drop of less than 0.1%, but we have given up earlier gains. NASDAQ also trading lower, now down 53 points, a drop there of 0.3%. NASDAQ 100 index down 0.4%, and the Dow holding on to a gain of 0.3%, up 122 points. 10-year yield 4.15% with a 2-year right now 4.46%. We do have spot gold down $4 the ounce to 2020, a decline there of 0.2%. West Texas Intermediate crude down 0.4% right now, 76.80 for a barrel of WTI. Bitcoin got above $50,000 again. Bitcoin today up by 3.3% right now. Bitcoin 49,733. Diamondback Energy has agreed to buy fellow Texas oil and gas producer Endeavor Energy Resources in a $26 billion cash and stock deal to create the largest operator focused on the prolific Permian Basin. Endeavor not publicly traded. However, we do have shares of Diamondback higher now by 9%. Diamondback, by the way, uses the ticker symbol FANG, F-A-N-G. I'm Charlie Pellet. That is a Bloomberg Business Flash.
We've all been trying to figure out why it's FANG, and
we've all been doing Diamondback Rattler.
Rattlesnake.
Is that confirmed? Because my understanding is John Tucker said he called the company and they didn't know.
I mean, Diamondback rattlesnakes have fangs. Okay. That's how I've always thought of it, but
makes sense.
I mean, I haven't confirmed this with the company, but
okay.
You know what, I'm going to call the company. I will call the company. Okay. I'll get back to you at the end of the 240 report.
Okay.
You got it.
We're going to get back to you. All right. Hey, listen. Right now, we want to talk a little bit about some of the companies in the gig economy. Last week, Uber Technologies reported a blowout financial quarter. The stock continues to hover near its all-time high. I think it's given back about 2.7% today, but it's up there. And this week, Tim, we're going to know whether the rest of the U.S. gig economy will benefit or whether that performance was unique to Uber. Because keep in mind, we've got Lyft reporting tomorrow, DoorDash on Thursday, both of them coming after the closing bell.
Okay, well, Ed Ludlow writes all about it in today's Bloomberg Tech Daily newsletter. Ed is the co-host of Bloomberg Technology on Bloomberg TV. He joins us now from our San Francisco bureau. Ed also contributes to the Bloomberg Tech Daily newsletter. Sign up at bloomberg.com/technology. Ed, Uber set the bar pretty high, but what's interesting about Uber as a company is it's different in terms of the way it reports, the business segments, than a pure play transportation company like Lyft, and then sort of a pure play food delivery company like DoorDash. Take us into your thinking here.
Yeah, I mean, there are certainly idiosyncratic things, right? The Uber has a very differentiated business. Even if you think about just rideshare, one thing that Uber does really well is give you lots of options. You can take the absolute top-tier premium option, which Carol does every day, black SUV or Lux. And then you have Uber X for the everyday man like me on my morning commute.
What about me, Ed? I just take
I'm just kidding.
I just take a Lyft city bike, okay?
Tim gets a scooter.
I don't even get the motorized city bike. I just have to,
The counter-argument to that is, well, hold on, Lyft has a differentiated business within mobility too, but just not to the same extent. But for me, the thing that really pushed me to write about this is that I don't think we really understand what's going on with the economy right now. I don't think we really have a firm handle on how strong the consumer is, what the impact of higher rates will be at the end of this year, recession or no recession. And it's just a wonderful lens to look through the gig economy. So yeah, Uber did really well. And what they said was demand was really strong. Consumer demand all around the world is great. Corporate demand is great. But the thing that kind of pushed me was the driver supply side. One reason Uber did so well is the number of drivers on the platform grew 35% year on year. I posed the question, where are all these drivers coming from?
Where are they coming from?
I mean,
That's
are they
dramatic.
are they really what Uber wants to see? Are these people who are working second jobs doing this and not relying on this as for their primary income?
And this is where we lack the data. We need a better understanding of who they are. Are they people that lost their jobs in the most recent quarter or quarter prior to that? One point that Uber would lean heavily in on is that if you're an Uber driver, you can drive for the rideshare component or ride-hail component and the food delivery component. If you have a car within a certain classification, you can do those more premium segments or you can do the more mass market segments. But we have gone through sustained periods of layoffs in the technology industry. And the other thing is, like, think about this sort of upstream. The amount of money that's flowing to startups or allowing founders to found new businesses is really drying up. Even at the pre-seed or early stage, venture capitalists are being more discerning in writing checks. And after the collapse of Silicon Valley Bank, which is 1 year ago, you know, those kind of existing credit lines, ways to get your startup going, they're just not available as they were at that time. So I'm trying to think about this more holistically.
Yeah.
But if Lyft and DoorDash this week say everything's great, what a year we're on track for.
So help me out here. I mean, that seems like a simple question to answer for Uber. Like, where are these drivers coming from? No?
It does sound like, but again, you know, think about it on a market-by-market basis as well. One thing that has been a boon for Lyft, but also potentially is going to be a significant headwind is in New York, where you guys are, and the requirement to pay a minimum wage or guarantee workers' pay, which Lyft has done for about 70% of its drivers. Now, if you are driving for a taxi company or you are looking for some stable income, that could be really attractive. For Lyft, it's difficult because their expenses continue to be high. But my question is, we don't know for certain how many of those people are turning to a gig economy job because they've lost their job from one industry, but in particular, my focus being technology.
Hey, Ed, how do you explain the different performance of Lyft versus Uber since these companies have started trading as public companies? Uber total return is up 53% since it went public. Lyft is down nearly 80%.
Yes. This is the final kind of question and paragraph in the newsletter today, right? And I say Lyft could really do with a lift. It's twofold. Go back to that diversification on the Uber platform. That, you know, they balanced kind of incentivizing drivers and doing promotions for the consumer along with really high volumes. And they grew those really high volumes or gross bookings by offering everything you could imagine and adding more functionality to the platform. But in the middle of that newsletter, I kind of want to remind everyone that we're talking about technology companies here. And at some point, the technology has to help. And what Uber demonstrated to us in the most recent quarter is that their algorithm is working well. They're using their underlying technology to match more riders with drivers more quickly, but also put forward more efficient routes. More efficient routes means a better price, but also some kind of more visibility to the driver on how much they're going to earn. And in the first instance, it does seem like Uber has a technology advantage over Lyft as well, or at least that the street is giving them credit for.
Does it also have an advantage out of just being kind of the big player out there? I do think about that in comparison to a Lyft or even a DoorDash, which is also reporting this week. I mean, Uber is massive in terms of its business size and market cap. Yeah.
So I've been speaking to a lot of sources at all of the companies and in the industry broadly over the last few weeks and months. And I think there's a general consensus that this is not a winner-takes-all market. It is a winner takes the largest share of a very big market. The problem being that, I go back to something I mentioned a moment ago, incentives and discounting or promotions. The drivers need an incentive to do something on your platform. They have a choice between driving for Uber, Lyft, or DoorDash. Where will they be paid the most and have the most protections? That costs each of those companies money. But at the same time, you want the consumers to keep coming to the platform as well. And incentives, discounts, and promotions have been how they've tended to do that, which also impacts the bottom line. The point being that as it stands right now on the demand side of this equation, the demand is there because the consumer seems willing to spend in these categories, which I think is another interesting economic indicator.
Well, it's so interesting because in different parts of the world, these services are so different. Uber specifically because it has such a large global footprint. But in New York, for example, you know, there really is in this day and age no other way to go besides Uber and Lyft because the taxi business has been totally decimated. Ed. So okay, so
which is
raises,
a regulatory thing.
Exactly. So it raises the question though about consumer behavior as well, because I can I only understand, you know, the way that I use these services, and I always just check Uber or Lyft, and I just go whichever one is cheaper. To me, they're commodities. Is that how consumers treat these services?
So what I do to answer that question is look at the average spend on all of the convenience apps going back to before the pandemic. What we saw in March of 2020 is people spend big ticket items, more than $100 in the delivery or grocery sense, or longer distance trips. Why? Because we all had to stay at home because of the pandemic, or we were spending more to get from A to B because we didn't want to walk or whatever it would be. But that number's come down. Now what we see is consumers spending more frequently, but with smaller tickets or baskets, less than $50 on average. What's interesting is what happens to a consumer in a recessionary environment. If you were going to go out for a fancy restaurant meal, you might get a takeout instead, but do that at home. You're still spending, but in a different basket size somewhere else. And that does raise the question of which of these platforms is most recession-proof. DoorDash and Uber have the food component, which Lyft doesn't. And they're creating a marketplace for the restaurants, which helps them survive when people aren't eating out. And I think that that is kind of the forward-looking part of this story. I'm excited to see what happens with our economy through the lens of the gig economy companies for that reason.
I think it's so important, especially in an environment where we feel we kind of rely on what these companies are saying specifically for some more information about how the consumer is doing, because government statistics continue to show strong sentiment, strong spending, and it's just kind of interesting to see what kind of window that they show specifically when it comes to the consumer. I will say in my household, I was taking like 2 Ubers a day to get back and forth to work because our company was taking care of us in a very generous way. We did a lot of ordering out, but I agree. I do smaller trips with Uber now, and if we're ordering out, it's maybe a small little lunch versus dinner or something. Like we've definitely kind of changed our habits.
Got to do the Lyft City Bike.
The Lyft City Bike.
Yeah.
I'll leave that to you.
Okay. Just bring a helmet with you wherever you go. It's very easy.
Ed, looking forward to your reporting as these guys come out this week. So appreciate it. That is, of course, Ed Ledlow, co-host of Bloomberg Technology on Bloomberg TV, joining us from our San Francisco bureau. So we've got Lyft tomorrow and then DoorDash on Thursday, both reporting after the closing bell.
Hey, let's get to world and national news. We got Nancy Lyons in the D.C. newsroom. Hey, Nancy.
Hey, Tim. The Senate is back at work on the $95 billion foreign aid package. Over the weekend, senators advanced the plan 67 to 27, moving closer to approving a bill that would support Ukraine, Israel, and Taiwan and send humanitarian aid to Gaza. That vote count signals it is likely the measure will make it through the Senate, but its fate in the House is uncertain. Republican Nikki Haley says Donald Trump made a mistake, saying he'd let Russia do what it wants with NATO members that do not meet their defense commitments. Other Republicans have come to the former president's defense after his remarks in Haley's home state of South Carolina, but Haley says she's focused on countering that message.
Keep in mind that this is a man who has wanted to destroy America and defeat America for years. I dealt with Russia every single day. It is a mistake for Trump to side with Putin over our allies.
Republican presidential hopeful Nikki Haley was a guest on Bloomberg Surveillance. U.S. Defense Secretary Lloyd Austin underwent a non-surgical procedure under general anesthesia to address an ongoing bladder issue. Doctors at Walter Reed National Military Medical Center outside of Washington say they expect Austin to be able to resume his normal duties on Tuesday. They say his prognosis is excellent. Last month, Austin was admitted for complications due to treatment of prostate cancer. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.